Wow, 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 wow. April 3rd, welcome, Pete Ward.
Morning. What a morning we've got.
I'm going to get murdered on these mining stocks.
Yeah, well, that's why you got your trading jacket back on.
I've got the trading jacket on from back on the floor. New York Stock Exchange got this thrown at me in 2004. But I don't know why I've got the American flag on today, because Donald Trump wiping $3 trillion off global stock markets at this moment in time.
That's it. We've got NASDAQ down, 3%, down sort of 600-700 points. We've got the Wall Street off nearly 900 points.
Shall we get straight into a look at the futures, because it is not pretty at all. We're right on that 5,500 level on the S&P 500 cash at the moment.
That's it. And we've been here twice recently in the last, 2 weeks? Both times it's defended. 200-day moving average and all that, and it's just been supported. But I don't know, today feels like the day that maybe there's a bit more of a wobble, I think.
That's the thing, and we've already got vol up 15%, 22.5. You know, that's about, I think we've seen it up to 24 in the last few weeks, but it hasn't stayed there for long. Even gold down on the day. You're seeing money getting taken out of assets globally. We got a hell of a lot to go through. Stick around for that market open at 8 a.m. But what have we got coming up first on today's show? Well, we're obviously going to cover the market open. We're going to get Richmond on. We've got Chris Beecham coming in. We've actually changed around the show today because Beachy is, of course, our chief market strategist, and he's going to be giving us his thoughts. He's just run in here a minute before we went on air and said Morgan Stanley have now taken out all expectations of rate cuts for this year. So we'll be going more into that at 8:15. At 8:30, we got Ben Hoff from the trading desk telling us what we're seeing first thing in the morning. Then we got Martin Harris. Actually, scrap that. We're going to scrap that because all sessions opening bell, I will come in and do that. Angelina and I will look at how that is opening. Of course, 9 a.m. we get all the US stocks open. At the moment, looking like Apple down 7, Amazon down 6, Tesla down 8.
Nike down 7.
Nike down 7.
Tesla yesterday was a roller coaster, right?
Absolute roller coaster. Trader Tools then, Tom Wilson home at 9.25. And then the one that only Nick Feingold, yes, he built Execution Brokers from scratch, and now is building a brand new content way of getting content for stocks. So Nick Feingold joins me at 9:40. Join us for that. But let's get into it. Nike cuffed because they make things in Vietnam, and Vietnam's been slammed one of the hardest of all.
That's it, although they are nice people, according to Mr. Trump.
Lovely people. Let's go into overnight action and show you these tariffs. Right, go straight to the Financial Times. Financial Times doing a much better job than the Wall Street Journal. We'll show you how Wall Street Journal sent round a fake headline yesterday, spoofing everybody in, thinking it was only going to be 10%, only for people to get absolutely murdered as the real figure came out. So there we have it. China, absolute worst affected, right? Because that 34% is on top of the 20% that already applies.
Yeah, it's huge.
That's brutal.
They're
really
already
gone.
talking about countermeasures this morning along with the EU. So it'll be interesting to see how that one plays out. And obviously the European Union as well, the other big impacted area.
So yeah, 20% on the EU, Pete Ward. That's the only one that was expected, right?
Yeah. I mean, that's the one that's been, heavily talked about with the motor trade and all the rest of it. But yeah, the China, the Vietnam, all those other ones. The interesting one was the Australian one about the beef. Basically saying that he understands why they don't buy US beef, but hey, you know what? We're not going to buy any yours anymore.
It's like so many ridiculous. Now, Vietnam's a really interesting one because Vietnam, of course, where Nike makes a lot of its products, they actually changed their constitution the day before, right? So Vietnam gave in to the US and they said, we're going to change our structure of tariffs on US goods coming into Vietnam. US said, no, we're announcing the tariff, and then we're going to announce, well, you would assume we're going to announce the win afterwards.
Yeah.
So that is the key for me, that this isn't all as bad as it potentially seems. Chart off, thanks, guys. We know that he loves the negotiation. We know he loves the deal. At what point are these walked back, Pete Ward?
Yeah, well, I mean, it wasn't the one that was walked back straight away afterwards by the Senate, which was some of the Republicans basically voting with the Democrats about the additional tariffs going on Canada. And I think they were scrapped within minutes. So there's a lot of, as ever with Mr. Trump, it's a lot of posturing, bravado, gameplay. But realistically, it's what can you actually get put through? What can you put in place? Now, I know that these, they're going live as of today.
Yeah.
But yeah, it's always the case that you get that big reaction, don't you, in the market, where it's an unknown and markets hate uncertainty. So they go, right, we're waking up today. What are we doing? What's happening? What's the impact? You've got companies like shipping companies, right? What are they going to be doing? This whole taxation on the goods that are under $800, that's being rolled back. So then all of a sudden, that's being tariffed again with $25 and $50 per item. So then you've got all of these different moving parts. And you get the headline, first thing you open the show with $3 trillion off the stock market, right? And everyone just goes, ah. So I think you've got to let the dust settle a little bit. See where things even out. I don't think you race in to start, buying dips, and you just let it do what it needs to do whilst little bits and pieces come out. And as ever, we find little things from the White House will come out going, oh, well, this is exempt, and this is this, and this is this, and
that's what I think happens. The very fact that he had already negotiated with Vietnam, but still put out the big headline, that just makes me feel that the next week. And then the other big positive for me, he says there's 3 trillion wiped off shares. The other big positive for me is they don't come in until April the 9th. They were meant to come in straight away, but they've clearly decided, right, we're going to give people 1 week to negotiate. So I actually think the April 10th expiries in the options market look really interesting for buying upside. So I'm not doing anything. I'm not going to buy the dip. I'm not going to, put risk on today. Going to wait and see what happens, because anything could happen today.
Yeah.
But in the April 10th expiry, I think a lot of this wiped up, and we get, we
get that move back up,
a decent rebound. But yeah, let's see how the Wall Street Journal spoofed everybody in, right? This is what happened on the announcement as Trump was talking. Now, I messed up because as soon as Donald Trump stood up, he said, countries have been raping and pillaging us for years. I thought, whoa, this is his Braveheart moment.
Yeah.
He thinks he's William Wallace, raping and pillaging like the English did to the Scots for years, Pete Ward.
Leave it.
Your ancestors marching over the Scottish border.
Yeah, it's probably a bit strong from Trump.
So he was in that mentality at that point. I thought, right, this is going to be nasty. So I put on a short around here, only to see it absolutely roof in my face, because the Wall Street Journal went out and said it's a 10% tariff across the board.
Yeah, which is basically, it's a 10% floor across the board.
Yeah.
Which is the key part, right? But everyone was expecting, is it going to be 10, 25 or 35? And then so as soon as any trading bot or anything, or you, the human bot, sees 10, markets go
that was
up. And I was watching it, I sat there, and I saw it on my phone and all the alerts going off and doing, and you think, right, okay, happy days, tomorrow will be a nice open.
It was so confusing though.
The markets are going back to what they were doing, which was, an upward trajectory. Yeah. And then,
out came the board. When he's got the whiteboard, it was going to get ugly. And there you see, boom, smack down, as we see the realization of these percentages that were getting thrown up on the board. There we have it. And that was the real shank down in futures to have us down now 3%. Where did the numbers come from?
So what is in the numbers that he's come up with for the reciprocal tariffs?
Yeah.
Well, I guess there's two questions. Is where do his numbers come from in terms of the tariffs he believes are being applied on the US?
Yeah.
which is an amalgamation of tariff / currency / there's a lot of kind of witchcraft in there.
We have the exact math. What economics degree Donald Trump has, I have no idea. It is trade surplus with the US divided by total exports and then divided by 2.
Right.
I mean, that is just the most preposterous calculation for putting a tariff on. That it's like, right, we want to hit them hard. What number can we make up to make it look like we get really hit hard?
Yeah.
And
let's just take that and divide it by 2.
And
put it through the random number generator.
Yeah. So, good morning to you all on the chat as well. Please chime in. Let's hear what you guys are thinking. Isar saying hopium. That's right. I am on the hopium track this morning, thinking that this cannot possibly be as bad as it looks in the first place. Good morning, Neil. Good morning, Jesse. Our German friend, is oil heading to new lows? Jugger saying buying dips in tranches. That's an interesting way to do it. The DCA as it goes lower.
Yeah, get an idea of your overall total size you want and maybe clip it into tens.
Yeah, 10%. Divide by 2.
That's it.
Add an export number.
That's it.
Neil saying stop, run, get out. And Boise, you are completely correct. China is the 34 plus 10 plus 10 that are already on there. So 54% on China. So let's look at where those US stocks finished the session last night. Right? Nike down 7% because it makes all its goods and is going to have to import them from those countries with the huge tariffs. Mm-hmm. Can they not just do a little runaround and ship everything into the UK and then ship it to America?
Not a bad idea. I thought you were doing a little swoosh sign. Could they not just do
a little swoosh across the world shipping? Elliot Hill, give me a call. Apple down 6.8. Well, they shouldn't have lied about having AI on their.
That's true. It's the only reason they were up. Yeah. But I mean, with all this sort of stuff, right, you look at these sorts of things and you think, yeah, you know, I get Trump's theories and such about needing to, well, his protectionist stance, which is basically, you know, protect. It's a national interest. It's a national security issue. It's all this sort of stuff. We've got to bring the money back in and all this sort of stuff. But he does nothing on the service side. You know, whereas America's basically a service center, isn't it? Mm-hmm. And you've got companies like Meta, and you've got companies like, you know, in the Mag 7 that are all offshored, right?
Yeah.
So actually, none of their services they're creating, which would generate a huge amount of taxation, is being brought back into the States. What he's actually doing is going into the age-old sort of playbook of going, oh, let's get into American hearts and minds and go, we're going to create all these jobs. And like, they've got this guy from Detroit, and we're going to have all his buddies back working. It's like, well, yeah, they're all like 65.
Popular.
Hasn't made anything for 50 years. And like a 20-year-old now is basically sat at home on his Chinese imported iPad. He's not interested in making cars. Like, so I don't know when in this 4-year premiership they're going to get all this stuff that's supposedly going to do all this. It just feels like he's making a lot of noise, as ever.
Yeah.
And he wants people to come and grovel to him. And this is the start of the negotiation. And then all of a sudden, it'll be, right, okay, we've made this great deal with this country, made this great deal with this. And realistically, he's creating chaos to ride in and be the king, right?
And we've seen chaos in Asian markets already. So Tokyo down 2.8%. Hang Seng, interestingly, down 1.6%. You know, I wonder if there's a little bit of the stabilization government fund in there in China, stabilising those. But the UK, have we got away with it?
It's a special relationship.
Has Starmer done us proud?
Is it the day where people go, yeah, Brexit?
I mean, yeah, not being tied to the European Union just saved us 10%, which is, how many billion dollars? I don't know. It's more than Boris had on the side of the bus anyway.
Yeah.
Controversial. Right, chart off, thanks guys. So, right, it's 7:45. If you're on the old YouTube, please cross across to the new one at TradeLiveIG, at TradeLiveIG. Don't miss all the chat in the box this morning with so much going on. We're going to be live here for the stock market open in 15 minutes. What are these mining stocks going to do? How much am I going to get slapped across the face? I've got a short copper position on, which has helped. We can look at the prices in commodity world. Oil, interestingly, right, world trade, if you are calling the end to globalization, commodities are going to suffer, aren't they?
Yeah, absolutely. And do you think that his plan now is to sort of double down now on the drill baby drill and take oil lower?
Don't call me baby. I think it has to be. We're definitely, if you listen to Scott Bessent in the All-in-One podcast, he is talking about energy as a whole. He's not talking about oil. He's not talking about fossil because he knows those permits are really tough to get. But he's talking about go big in solar, big in wind. Much like yourself. And so I think we see energy prices as a whole, depending on what he does with Putin, of course. Sorry, Terence. Terence I'm saying chart up to Terence and then I put it up and we start chatting. So if you pop that up, thank you very much. We've got copper down 3%. So that was we're meant to get a tariff on copper, and I haven't actually seen what that was. So it'll be interesting to see the LME against the high grade, because of course high grade is the US price, LME being the London price. Let's see if that spread comes in, because it was up to as much as 18% at one point.
What's the real pain trade for you potentially this morning then?
So I'm lucky. I've got a bit of downside on the DAX. I've got a daily expiry there. I feel like Diageo could bounce, potentially. Well, I mean, look, everything's going to get cuffed at the morning.
Around the sorrows.
And yeah, people drowning their sorrows, exactly. So I've got that 22,300 put on the DAX, but Anglo's, Antofagasta and Glencore, I am going to get murdered in. I think they'll be down 5%. And if they're not down 5%, I'm going to cut them all. In fact, I probably have to cut them anyway. Nike, I bought some Nike last night at 61.20. It's already $1 lower, but I want to get into the name, and I think Vietnam already is having concessions and having talks. So I think Nike bounces from here.
Seeing a bit of a divergence now from the lows. We've got FTSE coming back up a bit, but the Dow actually going a bit lower. So when I came into work, I think the Dow was off 850. It's now down 940, but FTSE's bounced off the low of like 84.70-ish back to 85.10.
Wow.
So maybe there's some realization about, let's have a look at where
safe
the
haven.
real impacts are. Yeah, I mean, yeah. It's a bad news story when the UK is a safe haven for investment, right, at the moment. But yeah, it has been. I mean, it's been the index horse in town since January, right?
That's right.
But that was when cable was 122. So we'll see.
The interesting one for me, the Currys have got good numbers. Are Currys going to be the only stock up on the day, or is British American Tobacco? Are we going to see defensive come into those water stocks? Pete Ward, is this going to be one of the biggest days of your career?
Well, who knows? I mean, that's how I start every day. But yeah, no, I think it's going to be choppy, right? There's going to be, it's all that uncertainty. We saw it in the previous two sessions, didn't we? We saw markets moving, big swings, directionless, no one really knowing what they're going to do, what's going to happen. Everyone was waiting for this. But now you've got bad news.
Yeah.
So realistically, the market probably starts to pivot towards, well, like we said earlier, will negotiations start? Will there be little bits and pieces that come out, which then sort of smooth things over and we start to get that little rise out? But for me, I think at the moment, this compounded with the JP Morgan or Morgan Stanley note this morning about taking rate reductions off the table, certainly for the next one in June, or potentially all throughout the whole year. As we know, the stock market is hooked on the drug of, well, lower rates or QE or whatever you want to call it, right? And so take that off the table, you've got the trade war, the geopolitical stuff, yeah, he's made a lot of noise about deals and peace deals and ceasefires, but ceasefires broken down the Middle East.
Yeah.
As far as I'm aware, Ukraine and Russia are still ongoing. So what's he actually really done? He's just created a lot of noise, right? So for now, if you've got money in your...
You're questioning whether he's made America great again.
Yeah, well, it's a process, I guess. But if you've got sitting money on the sideline, is today the day you go shopping? I would say no.
Well, let's look into that, right? You've been around a fair few years. I've been around a few years. What?
A few years more.
Few years more, potentially. On mornings like this, right, it's horrible. If you are sitting long positions, as I am, it's going to open up. There's going to be a horrible red number on your screen. Without giving financial advice on obviously what to do, because neither of us know, what's the psychological reaction in that instance? What's the best thing to do? Is it to step back and stop yourself panicking? Is it to...
I think it's to work out what you've got that's quality, and what is more speculative. And then to sort of look at it and go, right, what are my notional sizes in all of these things?
Yeah.
And because obviously the majority of our clients are trading it on leverage. So work out what your notional size is in each clip. And if you go, right, the total size of my book is actually too big. If we have a further 10% drop, then you need to start cutting some stuff out and cut the less safe names out of the portfolio, I guess, and just give yourself that time to sort of assess your book. But if you've got quality stocks in there, you've got stocks that are paying you a dividend, you've got stuff that you want to really hold for the long term.
That's it.
Then you don't have that knee-jerk reaction. And think about the impact of these things. How impacted is that business with regards to what's come out today? If you're long UK banks, is that really impacted by this sort of stuff? If you're long a massive shipping company, well, yeah, it is, right? So it's looking at that correlation to what's going on in the world.
Can we think of anybody that benefits from these moves? Any companies?
Brokers.
True.
If you wanted to look at sort of financial stocks, I suppose, financial sector stocks, there's that element to it.
US, the US, we can take the chart off for now, thanks guys. The US companies that organize on, build... Essentially, what Trump wants is to have more factories, creating more jobs and domestic production, right? That's what a lot of this is about. And he championed the fact that Apple's spending $500 billion in the US. Nvidia, the same. Just great company, great company. I'm trying to think who can benefit from building so many factories in the US.
Infrastructure, I guess.
Yeah, the infrastructure spend.
Caterpillar.
Yeah.
That's a big old US industrial, right? A bit of a stalwart.
True.
You could go with that. But yeah, you need to find like the US equivalent of what we've got over here, like your Barrett Redrow and maybe all that sort of stuff.
Yeah. And then it's whether you think this is positive in the medium term. That's the really tough one. Right, let's see what everybody's saying. Funky Gibbon thinks it's a tightrope for the next few weeks. If the UK aligns with the US, which it looks like it's doing, then will the EU respond to the UK? I don't think they will. How much do you read into the dip when it's pre-market? What do pre-market? Thank you, Boise, for that one. If it's low volume pre-market, how much can you actually believe in that?
I think it's helpful to see the stock market auction uncross. Like we've got now, for example, in the UK.
Okay.
To get a better idea. But yeah, that real pre-market sort of overnight, low volume sort of stuff is usually where you see exacerbated moves. General. I think it's good to get a steer on where things are.
Yeah.
But as we've seen, in only an hour, things have moved around quite a bit more as we get closer and closer towards the actual action of the open, I suppose. If you're trading in those times, I think, small and nimble, wide stops, that sort of stuff.
Yeah, that's the thing, isn't it? It's like, this is a capital preservation day. I'm going to have capital wiped out in about 5 minutes time, but it's deciding, what to do after that. We normally have a break at this stage, but forget the break today. It's not a day to have breaks. So what we'll do, we'll just go into a sting of into the opening bell, and we'll go straight into that when we're going to look at any economics that are coming up today. So we got 5 minutes to look towards the open. Pete Ward is going to take us through where the auctions are looking. First of all, we're going to look at the economics today. Is there any kind of number? Does it really matter on a day like this as well? But you can see today we've got, well, UK global composite PMIs at 9:30. We've got initial jobless claims at 1:30. And then the ISM services PMI comes out at 3. Normally, that would be important in a day like this, but half an hour after that's the kind of number that the market could bottom on.
Yeah.
Right.
And turn and pivot, yeah, potentially. But I still don't think today's the day, really. But we'll see. I've been proven wrong before. But yeah, in terms of other bits and pieces, news coming out. Volkswagen will include import-free on tariff-hit cars, according to the Wall Street Journal.
Say that again, sorry?
It says here, Volkswagen will include import fee on tariff-hit cars.
So the prices are going up straight away.
So yeah, there's that coming out. We've got Siemens to buy Insight-backed Dotmatics for $5.1 billion. Rolls-Royce are in talks on a UK subsidiaries for engine development. But I mean, all these things, it kind of pales in significance towards what's actually going to happen on the macro front. Travis Perkins was raised to a buy this morning. That's basically the only bit of sort of news.
Right, Travis Perkins cuffed yesterday.
Yeah.
Who's raised it to a buy?
Bear with me. Peel Hunt.
Okay, yeah.
£7.50
good name.
Target.
Good stuff, right. Yeah, Andrew McKelvey, thanks very much for that. New logo on my jacket, he's saying, should say poor.
Very good. You should get on the other side.
We got
side buy sell.
Hey, that's not a bad idea actually. Get my aunt to we'll get the Credit Suisse one because it that ended so well for them, didn't it? Right, we've so we got that open coming up in 3 minutes. FTSE looking down 1.1, the DAX looking down 2%, Eurostoxx looking down 2, and where's my CAC 40 down 1.7. Ooh, do we have any indications on these miners, please? I want to see how...
bear with me a second. Let me see what I've got in the pre-market.
So Anglo's closed at 21.50. So I'm expecting them to be down 5. So that's a very simple £20.45.
Antos actually had a reinstated buy recommendation this morning with Berenberg. Which might help slightly, but at 21 quid. You've got ex-dividend, you've got IHG.
Ex-dividends. Let's remember those.
Yeah, Smiths Group, Rentokil, Barrett Redrow. So don't all panic when you see those heavily off on the back of that.
Right.
Curry's indicated up 3%. Trading since January, as you said earlier, has been robust. Moonpig up 2% supposedly. On their numbers.
Well done them on getting my mum's Mother's Day card on time. They delivered on a Sunday.
Wow.
I was well impressed.
Next,
yeah. I even got her a mug with my picture on it as well. Not really. Maybe.
Definitely.
Right, Diageo. How's Diageo looking?
Let's have a look.
Scotch whiskey. He clearly likes Scotch whiskey.
Diageo indication 1.95 up.
Up.
Yeah.
So the relief coming into Diageo. Any, go on. How much pain am I going to be in Glencore?
Let me check.
That's the one I'm tempted to keep. 283.
Not too bad. 278.
What?
Yeah. But I mean, these are pre-market. We've got 1 minute to go. But yeah, there's 200,000.
Yours.
200,000 shares. Well, we can trade if you want.
Where's Anglo's?
1 second. We are indicating 2058 down 4.2.
Okay. And Antofagasta?
Antofagasta's we are down 3%, 1851. Sorry, 1630 rather.
Okay, yeah. Can you sell 1,400 shares down to 1625 for me, please?
1 second.
Right, we've got 10 seconds. Let's get this opening bell while Pete's doing that for me. To open the day in London as $3 trillion are wiped off global
1,000 down to
markets.
1625.
Thank you. Yeah, confirmed. We could well have some stocks that are impacted heavily, so they will not open. If they're moving more than 5%, they will not open at 8 a.m. We've got Prudential down 3. Prudential got that big exposure to Asia, so that is obvious why they're down so low. Let's see HSBC, also big in Asia and global. Lloyd's down 2. Interesting. Rio Tinto only down 2. We've got Vodafone almost unchanged. What a great stock to be in. Diageo up 2.5 on this.
So Diageo up 2.5%. Imperial Brands at 1.4. As you said, you thought BATs would be up. They are 1.15%. United Utilities, Halion. So all the defensives getting a little rise here.
I think I've got to take my profit in Diageo because I'm taking my losses elsewhere. So, right, 1,200 shares sold at 20.97 in Diageo.
At the bottom of the charts, we've got Phoenix Group, Standard Chartered, Mondi, Anglo American, Anthos, Barclays, etc., etc. Let's see if we've got anything done on your order. I don't think it's uncrossed as yet.
It has 16.19, so we've missed that. Let's see if we get any rally there. BHP down 4%. So in line with those miners, the worst affected. Is some of it priced in beforehand, Pete Ward? I don't know. I'm almost relieved with down 4%. Crazy. What else do we have that is looking a little bit? Scottish Mortgage Investment Trust down 3.7. In line.
Yeah.
That's the one that could go lower maybe. You've got Glencore down 3.3. Who would have thought Glencore at 273? The price targets are like £4. It's unbelievable. There's IAG with the dividend there, down 2.6.
That's interesting. And then on the macro front, you've
just looking at the UK just now, EasyJet down 2.2. Is this going to stop you going on your holiday? Has Donald Trump just ruined the family vacation to Fuerteventura?
No, I don't think so. Numbers were up yesterday, weren't they? In like a lot of the airlines, a lot of their bookings are ahead of schedule.
Yeah.
This is an issue at sort of the industrial level. The average person, as yet, doesn't change anything on the back of this.
It's not stopping you going to Euro Disney, no?
Absolutely not. No,
When
that's booked and paid for. That's Saturday morning.
Saturday morning, you're off to Euro Disney.
Come on.
Forget the markets. Forget the 3 trillion wipe down. This has ruined my weekend at the Grand National. So I was going to go to the Grand National on Friday and Saturday. I can't go Friday when markets are like this. Can't leave you people with nobody to host the morning.
I'm sure you can get up there after.
So there we go. Antofagasta I was a dick for a tick. It probably uncrossed at 16.20. And I've missed out there, already going lower.
Yeah.
Anglo down 5, Barclays down 4. Somebody ringing the bell in my ear must be to say that that's the low of the day. Do you think?
Maybe, yeah. Or maybe they're telling you off for using a swear word.
All these stocks down 2%. Look at that. WH Smith. So world travel, they are assuming is going to be hit. Or European travel even, across Europe with those 20% tariffs. Shall we have a look at Europe?
Yeah, sure. Have you got the, there you are. So Airbus, interestingly, these.
Oh, Adidas.
Yeah, JD are off similar, actually.
Why is Adidas down?
JD are off 6%. Adidas, well, it's same read across as Nike, right? They're making this stuff.
Yeah, but they don't.
They're not an American firm, but
that's an interesting one.
Maybe you've got yourself a little pairs trade there.
Because am I being stupid here? So Adidas sell round the world, right? America's only one of their.
But it must be a huge partner of theirs, I guess.
I mean, obviously they sell into the US, but 10% of the value of Adidas. South Africans aren't going to stop buying Sambas because of US tariffs. I guess you've got a bit of global consumers that now I have to buy some. I'm gonna talk myself out of it. But yeah, buying 50 at 201. It even bounced a percent.
Barclays cut them yesterday. There you go.
To a target price of 220.
Cut them from 234 to 230. From 237 to 234. So not.
Exactly. So now I've got
Goldman Sachs raised to a
upside
buy from neutral.
That's
all I can find for you.
I'm already gonna, I've got a bit of Nike. I'm gonna get hit in that. Oh, I don't think it's a 10%. I think that's a little bit. Maybe I'm wrong. Tell me if I'm wrong in the chat there. Let's see what would you be doing on this open. We've got Jugger saying, does anybody want to buy Tesla? There's, of course, the news yesterday that Elon might be stepping back from the government.
Yeah, which shot the stock up, right? Because all the investors and everything are so disgruntled, I guess, at him trying to sort of make his way in the political arm and not being at the coalface driving forward the tech, because he is the reason most people are invested in Tesla, right? It's not necessarily because the amount of cars they sell. Car numbers usually just shrug off. It's all about the forward planning of what they're actually going to build, the autonomy, the robots, the humanoids, all this sort of stuff. Yeah. And if he's off, trying to whip votes in wherever he was, Massachusetts, and lose, it's not a great look, I suppose. You want your captain or your coach or whatever back at the team, right?
I see the guys very funny. Is Rich wrong? The poll, we've already had 11 votes. You lot are as bad as them. Right, there we go. Is Rich wrong? I mean, let's narrow this down a little bit. Is Rich wrong to buy Adidas here? Would have been a more appropriate poll, I feel. But you go for your life, guys.
Is Rich wrong again? I think it would have been nice.
Yeah, again. Yeah, exactly. Danon. Now, if you're in Danon, that's the place you want to be this morning. Up 2.4. Nestle hiding away in those Swiss Alps, up 1.1. Switzerland was only 10%.
Was it part of the? Yeah, was it similar to the UK one? 1 second, I got the little the graphic here. Where is it? Here we go. Switzerland. No, 31%.
31% Switzerland.
Yeah, because apparently they're putting on 61% on US.
Right. Okay. Yeah.
And the old rule of two.
Divide by 2.
Yeah, and you can only have round numbers.
There was actually chart off for a second. There was a hilarious part, and I wish we had the picture of the tariff board. There was one part.
I got it here.
Oh, have you got it? Can we zoom in and see which?
You can, but
do you mind if I borrow that? Yeah. Sorry. So there's one country that is quite far down. There we go. Yeah, Israel is 33%, so they put a 17% tariff on them. Mm-hmm. And then, where is it? And then the Philippines are 34%, but we'll just stick the same tariff. We'll put 17% on them as well. Switzerland, 61 divided by 2 is 31. It's just like they've really hit some of these. Sometimes they've rounded up, sometimes they've rounded down.
They've just got the old Excel filter by 2, drag it down,
round.
Job done.
I mean, it's such a joke. Oh, there we go. Thank you for supporting me. 60% say Rich is not wrong on this occasion. Although I've just seen Puma is also down 9%. Now remember, Puma had already been absolutely murdered. If its sales are 0 anyway, then I'm not sure it can be hit any further. But just look at that performance. Puma, new lows now at €20.70. Let's have an update look on the FX and commodity markets as well.
Update you in your order as well. You're working to sell 1,000 with me right on Anto's 16.25. We've just come up now to 16.19.5 at 21. So do you want to keep it there?
Get rid of it. Go.
Pull it.
Sell it. No, sell it.
Oh, sell it. Drop it down.
Get me out.
Okay.
Thank you, Pete Wards. Right, updating you. The dollar is getting crushed. There's a little bit of an interesting one. Morgan Stanley saying you're not going to get any rate cuts in the US anymore.
Done at 16.21.5.
Mine, yours. Thank you. Very happy with that, actually. That's better than I thought it was going to be.
Good. What I like to provide.
Right, yeah. Morgan Stanley saying no rate cuts in America this year, but the dollar getting slammed. Those two don't equate.
It doesn't equate. No, you're right. And I can't put my head around that one. I can't really put my head around why gold hasn't moved either.
You can kind of get that. Like if you're getting margin called today, you take the cash of the thing that isn't down, right? If I was liquidating stuff today in my ISA and I want to buy some Nike at $60, I sell my gold that's up 200%.
Yeah, it's had an unbelievable rip. Yeah, true. And there's a queue of people probably waiting to buy that as a defensive play. So realistically, at the moment, you've got a buyer meets seller, and it does nothing, right?
Yeah.
Okay, interesting.
I think so.
But yeah, back to your question on the dollar, head scratcher, because we always thought bigger tariffs, more protectionist, stronger dollar, rate reductions come off the table.
Yeah.
Dollar goes stronger for longer.
Yeah.
So is it outperformance of the other part of the currency? Is the sterling up because of the sterling's effect with regards to the 10% tariff?
Sterling, I understand. Euro, I don't. I'm gonna sell some euro here because that to me doesn't make sense. Just make sure that's the right contract, is it? No, that's major FX. I don't want to be. What's the difference in major and the minis on
the CFD side? I think the minis typically are, well, it depends on the actual contract you're doing, but in some cases it can be like a tenth.
Don't want to do 10 times the size.
If you do a full S&P, it's $250 a point, whereas you can do a mini for $1, right?
Yeah.
So yeah, careful to look.
Right, update you on those markets then. FTSE down 1. FTSE getting away with it. Well done, Keir Starmer. You might not be a Labour supporter, but he's done his magic here. The DAX down 2.3. Wall Street now down 2.5. Is a bit less than 1,000 points. No, dead on 1,000. And we've broken the 5,500 in the S&P. We're down 3.5 in the Nasdaq, and
I think S&P from last time was 54.70. I want to say around that level
was the low.
Yeah,
Let's look at that for you.
I mean, this is, but yeah, if you bring up that chart there and go maybe 4 hours.
4 hours.
Yeah. So. Where were we there?
Ooh.
So that was a rocky Monday morning. Then we had that nice relief rally.
Oh, 54.86. We're exactly there.
Yeah.
So that was where we bounced off before. We're right there. Ooh, that's a worry, isn't it? That is a worry. Tell you what I've got to do. If I'm closing my Antofagasta, I was short copper against it. So we've got a bit of help there. That's $40,000 of copper buying back. So so I've got a 2,000 P&L there to go against the 3,000 I've lost in Antofagasta, I think. Oh no, 1,200. We still got a bit of Antos, that's why. Got it.
Yeah, I did them directly to your account, but providing this is that account.
Yes.
The main account.
The main account. Right, what have we not looked at? Let's get an update on before Pete Ward. How busy is it?
Pretty busy, actually. There's quite a lot coming through. I've got a recorded chat with majority of my clients, but there's a few kind of asking questions and maybe wanting to have a little chin wag. So I might jump off actually, given how much business is coming through.
Understandable.
And how much market's moving, yeah. Thank you, Rich. Good luck.
Cheers.
Good luck. Keep the jacket on all day. I think you're going to need it.
Yeah. Well, it's okay. That bit's got to go now. So it's let's get a patch over that, and we'll get the old Credit Suisse one for luck. This was the jacket I wore on the day we IPO'd Glencore at £5.40. Okay. Now £2.70. Exactly a half price sale on Glencore. Right, let's see if we can get Chris Beecham in to help us on. Let's get a clever bloke in now that Pete Ward's walked out. Let's get the intelligence of the room. Let's get the intellectual average increased. Here he is, Chris Beecham. Thank you very much. On a busy morning, we don't mess around with breaks here, no, Chris Beecham.
No breaks. It's a crisis day.
Right. Now, let's take a really quick update while you're getting settled in on those winners and losers in the UK. Standard Chartered worst, down 8%. Mondi, interesting. Haven't looked at that for a while.
Packaging, isn't it, Mondi?
Mondi Packaging
Yeah,
and
so
paper.
there we go, yeah.
JD Sports down 5, Anglo's down 5, Anto's down 4, Burberry down 4, back down to 730. That was at 10 quid, wasn't it?
Yeah, it was, yeah.
Barclays at 280 down 5. That's a big loser. Then BHP, St James's Place. Oof, people with their pensions in those US markets getting wiped off that one today. So they're losing as much of the assets under management. Chris Beecham, Donald Trump has just wiped $3 trillion off global shares. What do you think?
That's about the long and short of it, isn't it, really? I think if you look at it, total market cap and the loss overnight, I was literally typing as he was 10 minutes in, he'd finished his rambling, and everyone thought that, as you said, the Wall Street Journal line about 10% tariffs was it. The market was up. I was merrily typing a comment to go out and say, oh, this isn't too bad. And then wham, out came the chart, the big board.
That was the key, wasn't it?
Yes, as soon as the presentation comes out, can we have the next slide, please? And then, woof, it's crazy. It really is. It's throwing up some great facts. My latest one that I found out just a minute ago, the Heard and McDonald Islands, they are external territory of Australia. They have 10% tariff. Nobody lives there. Penguins live there.
You put a 10%
Nobody's
tariff on
visited in 10
penguins.
years. Diego Garcia, so US, Indian Ocean territory owned by the UK, and US rent it for their military base. Only Americans live there. They get tariffs too. What are they exporting, importing? I haven't the foggiest. So yeah, it's that kind of morning.
So the list isn't just the board then. I guess
there's about 7 pages if you go through all the way
okay.
down. It includes things that we're saying like Réunion, which is an external territory, it's an integral part of France, and they get an extra tariff. But the weirdest one I saw this morning was Lesotho, which exports diamonds. The US, obviously, big diamond miner. They don't import almost anything from the US, but they got a higher tariff than they use the same tariff as places like South Africa and Namibia because they're in this customs grouping.
Of course.
They got a higher tariff because of the way this has been calculated.
Oh my goodness.
So one of the poorest countries on the globe has been hit deliberately with this dumb tariff thing, and because they've been told, this is the whole US approach is trade not aid, and now it's just gone out the window.
So take us through the calculation.
So yes, let me get this right. It was the overall trade deficit a country has with the US.
Surplus.
Yeah, divided by the value of the goods they export to the US, right? And then you get to divide that. You get a percentage. For example, Indonesia was about 17 billion deficit, and they export goods to the US for about 29 billion. Divide 17 by about 29, you get about 64%. My numbers might be slightly off there.
Okay.
And half that 64%, and you get the tariff rate the US is imposing.
And how absurd does that sound, to you? Is it completely illogical, or does it have any basis?
Well, it has a basis in the fact that you wanted to give the president a simple calculation he could understand and go to the press. I think this is, remember, a president that insisted everything had to be one-page summaries.
Yeah.
So it's that kind of process.
I quite like one-page summaries.
Well, so did Churchill, to be fair. But this is to make it as simple as possible. But it views, again, global trade as some kind of bilateral thing. It's just me to you, you to me, and I don't worry about my trade with somebody else, and I don't care about your trade with them. Of course, global trade is holistic. So what happens now? We've got EU and China talking about where they can redirect trade. You've got the amazing spectacle, the report this week of South Korea, Japan, and China, all three together, thinking of the response to tariffs. And South Korea and Japan don't even get on.
They're not best friends, are they?
Let alone China and everybody else. This is upending the global order. It's incredible.
So I guess, look, when Russia invaded Ukraine and huge sanctions were put on Russia, we pushed them into the arms of China.
Yeah, well, you could look at it that way if you want.
What negative consequences do you think this potentially has in geopolitics?
Well, I think it reinforces that them and us narrative with the US. It will, as we were saying at the beginning of the week, this begins to upend that post-World War II order that benefited the US fundamentally. Look at the net wealth of the US. You had Trump saying that we're not a wealthy country, we're going to be wealthy again. There already was the world's largest economy, the largest per capita GDP, all this kind of thing. How is this going to make a country better off?
This takes us back to the debt.
Yes, it does. And this is the thing. I think it highlights your argument that the US is borrowing. You had the budget announcement last night as well, that the Senate has pushed for a $5 trillion increase in the debt ceiling, but didn't really talk about the budget cuts necessary. So that slipped under the radar.
Wow.
Now, it's supposed to raise, what, 600 billion or so?
Yeah.
Which is a drop in the ocean for the overall.
I think that was the key. That the 600 billion number was released 2 days ago by.
I forget now, but that was sort of the number
Yeah.
that's being touted, because his view is that the tariffs will make money. And of course, he goes back to the idea, as he mentioned last night, that this could replace income taxes because everything went wrong for the US and they brought in an income tax.
So how exactly? Run us through how it works, right? So I'm Nike. I'm making shoes, making shoes in Vietnam.
Yeah.
And I ship them to the US.
Yeah.
What happens? Where does this thing come in?
So it will get applied as the product comes into the US.
But I make them for like $3.
Yeah. But all your profit margins are constructed around that. So now you're having to, whatever it is from Vietnam, what was the Vietnam tariff? Something ridiculous, like 60%.
Yep.
And so that impacts your margins.
But that's what I mean. Is it 60% added on to $3?
Yeah, it should be. Well, it should be whatever you're going to sell them in the US for to your suppliers, your retailers, and say if you're, I can't think of a US sport realistic because I can't do sports, but
Yeah.
if they're then selling them on for $4 or whatever, just to keep the numbers easier, you're going to be increasing those prices to account for the impact of that tariff.
No, but I'm selling them for $80.
Yeah.
So I make them for $3. I then sell them into Nike
US.
Yeah. I then put some laces in.
Yeah.
And then I sell them to the supplier.
So it will push up the cost for the origination point, I suppose, more than anything else. But of course, it's almost irrelevant really how that works, because it's how it feeds down the line, because everyone's pushing up the costs and then it's going to...
Well, that's it. But to cover every single tariff there, then I just increase the price by $3. Mm-hmm. Well, it's 2%. Who cares?
The idea is that I suppose that someone else will make trainers in the US and sell them for slightly cheaper. That's his view of how this should work.
But why does that matter so much? It feels like to me what people are doing is taking the $80 trainer and applying.
I suppose that is how it's
to that.
Yeah, so it may not make that much of a difference at the origination point, but when you've got earnings estimates being computed by this, I mean, analysts must have been up all night to work this one, and how that's. And we've got earnings season starts next week. How that's going to filter into it. Stock markets, as we know, are essentially the product of expected earnings.
Yeah.
That's why you and I buy stocks. So if you're now projecting those earnings to start to come down, that's forecast to come down. We're going to why stocks should be trading at these levels, and that's why we're seeing. You saw that initial relief bounce because the 10%, we can live with that. It's the lower end of projections. Again, it's all about the game of expectations, and suddenly it's that actually no, it's not here, it's up here.
So what we haven't looked at yet is what this has done to yields. So I'm going to get the US move. We were at 405 on the 10-year. Yeah, we're at 407. So here is the US Treasury numbers. If Morgan Stanley are right and we're not getting any rate cuts this year, well, the market is wrong.
Yeah. Well, I think what we're seeing is one of those moments where the market as a whole is doing its thinking in real time, and jarring views will emerge. So as you were saying, it seems odd to think that Morgan Stanley is saying there won't be any rate cuts now, when we're thinking, well, if economic growth takes a massive knock and job growth takes a knock, that will prompt them into maybe action. So I think you're seeing everything being evolved at this point, and things will come back in line probably in due course as we get more forecasts, people issue more statements. We don't know at the moment, obviously, what kind of retaliation there will be. You had Besant saying, well, if you don't retaliate, if you come and negotiate, that will be the top end you saw last night. So there's the possibility of that, and it's the after the deal. He's put up a marker. He wants everyone to come to Washington and be nice to him. It's all just about stroking his ego, really.
So where are we in? So sorry, the 10-year 407, the 2-year 381, right? So that 381 is key on that 2-year that we're expecting rates to be significantly lower in the next, let's say, 18 months to get that average down, because the 1 year is at 4. Okay, chart off, thanks guys. So If I traded solely on the, let's say news flow can only be positive or negative,
Right, okay.
isn't this the worst possible moment? The most negative news is now out there and markets react today.
Kitchen sinking.
He's exactly.
Maybe, because the assumption may be that people now journey to Washington and begin to negotiate on tariffs and start to work it from there. So you could look at it that way, or you can look at it that people go with their first and understandable instinct, which is to respond, and therefore you might get a response in the US. And you're just, again, to think back to how does it hurt earnings? How long do these tariffs stay on for?
Yeah.
How long does that earnings impact take to be worked out? And then it begins to hurt stock markets. And if it hurts economic growth, tariffs. I think the view is fundamentally emerging that tariffs are deflationary because of the way they hit demand. And certainly tariffs this side. This is the highest US tariff rate since 1909
Yeah.
overall.
What was it like in those days?
Well, it was a lot harder, put it that way. So it takes it back to levels we haven't seen in decades. And it feels to me like Trump is this sort of King Canute figure, you know, trying to hold back the sea, as the old story has it, or was told by his advisors that he could hold back the sea.
Yeah.
You can't hold back globalization. He wants to unwind it, but his net effect will be to hurt the US, I suspect, at least in the short term. Because building a new factory, okay, Nike says, okay, we'll come back to the US today.
Yeah, the
But they've got to,
costs.
how long does that take? Will he still be in power by the time the factory starts operating or he's even built? Don't know.
Oh, I don't know. You can get a factory. In China, you can get a factory up in 5 days.
Yeah, so China you can, but this isn't China we're dealing
And that's precisely why things should be made in China,
Well,
right?
but
And not-
perhaps exactly. I mean, even they have seen a decline in manufacturing because they've been undercut by other parts of East Asia. So this moves on, really.
Yeah. Getting a small bounce here.
Yeah.
We're maybe, well, who knows? Was that the worst of it? We bounced off 5,486 in the S&P, right back above that 5,500 level. But join me at 9 a.m. in 32 minutes time. Angelina and I are going to be live for the US stocks open. With the NASDAQ already down 3, what are we going to see as US stocks reopen? Let's see if it's still got how bad they were last night. Yes, it does. Palantir was down 8. Tesla was down 8. Nike down 7. Apple down 7. Walmart down 7. That's a random one. Uber back below 70. Let's see how that looks in half an hour as we see that US Open. Chris Beecham, thank you very much for joining me. What's your final word? Not to give your Jerry Springer moment. What's your feel on how this looks in a week's time?
I think it looks quite bad for markets. I think people will shoot first and ask questions later in terms of their portfolios. So we'll wait and see. As ever, the price will tell us what we should think, but we'll see.
So very much step back from your computer, go for a walk. You know, you're seeing prices now from an old world.
Yeah.
This is a new world
exactly.
order.
This has to emerge over time.
Yeah.
Really.
So don't be taken in by Google's on 16.5 times earnings.
Yeah. In the old world, how
Yeah.
does that look in a week or a month's time? Yeah. It looks cheap now, but can it get cheaper?
Brilliant. On that note, we'll go to a break. First one of the day. And thank you very much for joining us for this opening bell. We'll be back shortly. Make sure you're on the right YouTube at TradeLive IG. Yeah, Angeline going to be joining you in 2 minutes. Thank you. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks. Hey, welcome to Live from the Trade Desk with myself and Martin. Shock and awe. This is a day when we're seeing a sea of red out there. How are you?
What a night.
What a night. I watched it live. Did you catch all of it as well?
I didn't watch all of it live, but I was watching Twitter, well, X, the entire time, looking at the feed coming through, watching my account, just watching some of the markets.
Hopefully not crying, watching your accounts and crying, hopefully not.
Not crying. I mean, fortunately, I was sort of holding a short at the time to try and hedge against the downside. Thank you to Axel on that trade of the week. Closed it. Trying to catch some of that upside at the moment.
I was watching the reaction. It was really, really fascinating to the markets. I mean, he did come in really aggressive first. Then people thought, starting off with 10%. Then, boy, did he then unveil all those extra tariffs. I mean, we've talked about this all morning. No prizes for guessing how the market's just showing. Let's whack up the chart here. to give an overview of where we are at the moment, bloodbath really. Tech 100 down 3.5%, Wall Street down 2.5%, Germany 40 and FTSE also not spared. They're down 1.5 over 1% each. US 500 down 3%. Did you see the live reaction to early on during the Trump speech? Nothing seemed to be spared except for Tesla, actually. Everything that I was checking on, whether it's US pharmaceuticals, whether it was US banks, they were all in the red yesterday.
Yeah, in terms of like where the markets reacted, we still need to go through all of the tariffs. There's a lot of exceptions in place. Countries like Taiwan, their chips are spared from the tariffs. But everything else, so a country like Taiwan, big export for them is actually the bubbles in bubble tea, the tapioca balls. So that is a huge industry for them. That your bubble tea is now going to become a lot more expensive. Funny things like that are going to.
Oh. Out of all the things you were going to say this morning, I did not expect tapioca balls.
Yeah, the bubble tea. That's going to be just tariffed to the hilt.
To the hilt. Okay. I mean, like, this is definitely not a spoiler alert, but they are not friendly, these tariffs. It's just taking you through, again, 180 countries being slapped with these tariffs. China, Europe to pay 54% and 20%. UK, of course, 10%. It feels a bit like end of globalization. I feel like we're being thrown back to the 1930s when all these walls were going up.
Yeah, that's really.
We rebuild the Berlin Wall.
That's the theme, right? Well, maybe we put just a wall around Europe at this point, and then just trade amongst ourselves. We're not even in Europe.
We're not even. Oh, yeah. Oh.
I mean, UK spared some of the damages of Europe.
I guess the question now is, we are in this time where we're thrown back to 1930s. He's calling them Trump's. The wording was really interesting. He kept on saying kind reciprocal, right?
Yeah, well, that was always lower, right? And I mean, some of those numbers did look made up. There was a lot of small print on the screen, which said that they were including what they believe is currency manipulation. There are countries on that list that did surprise me. There are countries, one of the things that I think Donald Trump did do with this message is that most countries in the world have a tariff on American products. So Americans trying to export into the rest of the world are facing tariffs. I think that's one of the things that Trump didn't get the message across originally, that actually these are reciprocal. He's not putting a tariff on as the aggressor. He's putting on a reciprocal tariff, which is now becoming, seen as like the aggressor tariff. So, India, 59% tariffs on American goods. Interesting to see Israel on there. High margin services. I'm sure that they're going to need to cut a deal, because that's a country that depends on the United States. From a large defense standpoint. Surely they would want to cut a deal. So it's going to be interesting to see the reaction from which countries come forward. I think what Trump wants is he wants this drumbeat of big multinational CEOs announcing they're going to move a production facility to the United States. Maybe the auto is going to places like Detroit, Arizona, wherever. He wants that drumbeat. Texas, yeah, more something more in Dallas. He wants that drumbeat of people announcing that these tariffs are forcing them, not necessarily forcing them, but based on them, Donald Trump has set the tone. We're going to move our production facility to America and give Americans jobs. And that's where he might start rolling back the tariffs. The tariffs have now worked. He's got what he wanted. Now he can negotiate.
And that's absolutely right, because in his speech, he did say, we're going to hear from these people, we're going to hear from these nations, and they're going to come to us and start asking us, but we'll be ready. I mean, he's already preempted that, right? The interesting thing is, and away from the numbers, totally right. When I saw your comment this morning, let's put up the YouTube chat there saying American companies that outsource offshore in the first place. Of course, they weren't forced to do this offshoring, right? They weren't, there wasn't a gun put to their heads. The reason why American companies outsource so much in the first place is because it was cheaper to make their products elsewhere. But it was interesting that Trump framed it as they're taking our jobs. We've subsidized the rest of the world. They've taken these, the business away. But actually, there was a reason for this outsourcing to happen in the first place. Some of the other clever comments this morning. Matthew Cook responding to Spike, saying that I think there are no explicit exemptions on a company basis. It's just, well, hurry up and build your factories. I think that is correct. You agree? I think it was an overall, just get your factories built here.
Yeah, not on a company basis, but that's what we'll need to see. I think talking about you've got the situation whereby the American government encouraged American businesses to not operate in China. They moved out of China, moved into places like Vietnam. Now America going after Vietnam. So that entire kind of friend-shoring situation, they're now attacking that. So I think for businesses, this is very difficult because it takes multiple years to build up capacity, to move factories, to build things, to get them operational. This is not an overnight switch. This is a 2 to 4 year process. I think Mexico might actually be, because Mexico, Canada, Russia, and North Korea left out of the tariffs last night. I think that Mexico, the net beneficiaries in the short term, and that's sort of my feeling here. So it's difficult to actually watch Trump attack the countries that have kind of taken on this friend-shoring basis. I think there's a short-sighted nature there.
What's interesting too is that all this tariff talk, of course. Let's have a look at the VIX here, because yesterday we were talking about volatility, and we're talking about how potentially this could push volatility up. We are seeing volatility right now near that 22 and a half handle there. I expected it to spike higher because in my mind this is more than what was expected. So this really was the shock and awe that I was anticipating from Trump, but it is still at that 22 and a half handle. It will be really interesting to see what happens in the all sessions, which will be in about, Rich and I will cover that for you and take you through all the movers and shakers in less than 15 minutes time. Waka waka, morning to you. No one asked for forced American democracy as Waka Waka's response. The real question is, do we see breakers hit today? What do you think, Martin?
No, I don't think so. I think this has been, the tariffs have been sort of well signposted
and for some time.
And I think it was really, we're just sort of amazed at how broad-based it is at the moment.
Having a look at the currencies as well, just putting that up for you. Sterling, as you can see there, cable higher there, and that is mainly because the dollar has, let's have a look at the dollar. This is the dollar basket there. It is down at the moment 0.5%. Interestingly enough, good question from one person in the chat. I was looking for Trump to touch pharmaceuticals, but I didn't see anything. I did listen to from the beginning until the end, Brian, Brian, when Trump asked Brian, the auto worker, to come up and speak for a bit. And once he finished all the tariffs and started saying he appreciated the senators, I waited till about then to see whether he was going to do anything with pharmaceuticals, but I don't think he did. I'm going to confess, I may have fallen asleep on the couch, on the sofa by that point. But he didn't, right? Did he? Trader friends, if any of you know, please let me know.
Put that in the chat.
Yeah, please put it in the chat if you know, because I wanted to find out whether pharmaceutical stocks were going to be hit. Because I was poised to see whether or not those are some of the stocks that are not in all sessions, so you could catch them at the cash open. Speaking of which, loads of other comments coming in. Neil saying tariffs enrich local economics. Do you mean economies or economics? And Neil also chiming in saying tariffs benefit the wealthy. well, it clearly is going to make things really expensive overall for everyone who, we don't have.
Yeah, there's this message
Millions
coming
of
out of the White House at the moment around, the goods that have been deflationary, this kind of flat screen TV kind of deflationary economics. And I think one of the comments was, let them eat flat screens. What the Americans are trying to do, what the White House are trying to do, is they're trying to uplift some of those manufacturing jobs in the United States. What has happened over time is that the technical work has also left. So they're okay with low-level work exiting and being, basic kind of low-value goods being made offshore, but the high-value stuff they want to bring back to the United States. Autos, I think there's a lot of politics and there's a lot of
Well, they have a lot of voters then.
Yeah, and there's a lot of emotion around autos. Typically very low value goods. So, America now is this services economy producing a lot of software, a lot of tech, huge margins, 50, 60% margins, and they're worried about Europeans selling, Porsches at a 7% margin in the United States.
Totally. And we're going to get more on that, how to trade this. Just a reminder, this is a huge day. Make sure you stay on with us. I know that normally now might be time you go to, go to work, but subscribe to the channel, click on the like, because if you like this and you want more of it, do click subscribe. Also stay with us. All the gallery people are going, call in sick today because it is going to be huge during the all sessions. This is one of the most exciting days. I can only remember 2 other occasions when I've said stay with the screens because this is historic. The 2 times is the Brexit referendum and also the day after the trading day after the Twin Towers. This is historic, people. Do hit the subscribe. Matthew Kirk, good morning. I believe pharmaceuticals are exempt from the reciprocal tariffs, but not the 10% baseline. Thank you very much because I was listening like almost 50 minutes in, and because Rich and I are in at the crack of dawn, awake for this bright eye bushy tail, I was like, I need to get some shut eye. So the other interesting thing, of course, is Dylan from tastylive and I were talking about how do we trade this? How do we gain that edge in a time when everything's shifting sands all the time? And so we created baseline. So the baseline was that things are going to get more expensive, but people still need, your utilities will remain strong. People still need, energy to get round. But also, time to go to like drug stocks perhaps. And whether or not, I asked him whether he likes sin stocks, whether that would be, somehow a bit more resilient. We talked about luxury goods makers, Hermes going super high end, where the tariffs are unlikely to hit people who are more affluent. What's your view?
Oh, so where to find?
Where's the safety?
The safety. So I think the safety is in goods that don't require that are localized. Luxury is an interesting one. So if you have this kind of forced earnings recession that we're potentially going to see in the United States, and capital markets depreciate, that's going to affect people who accumulate capital. So the very wealthy are going to see their net worth decline. Are they going to accelerate their purchasing of luxury goods? Probably not. So even that space is not safe. I think that if for people looking for opportunities, there are going to be options to play around. We looked at the autos previously. We looked at which autos are least exposed to the tariffs. What are the most American-made cars? We looked at how Ford produces a lot more of their components and their cars in America compared to a company like GM or Stellantis. Tesla, again, the most American-made car. However, huge political kind of emotional situation hanging around Elon Musk. Do we want to buy that? That's a lot of questions around that. Still not in a situation where you can just take the fundamentals of the company and say this is a value play. The next thing is that tariffs also going to impact the hyperscalers. So from the AI side of things, the cost of now building AI capacity, building your server farms, things like that, going to cost a lot more. So those hyperscalers who had these incredible margins, they're now going to be tariffed as well to actually build those components, because no one's going to have capacity in the United States now. So if you want to build things now, you have to pay the tariffs. Maybe if things go according to Trump's plan, you know, maybe in 3 years' time, America's got capacity to deliver on goods. But right now, they don't exist. So tariffs are going to affect almost everything.
We've got a few more comments coming through on the chat, asking whether or not, Steve Davies asking whether or not and how this will affect house building stocks. Well, Steve, I do like house building and all things DIY materials related. And my view on this, my humble opinion, is that if you trade the Lennars, the DR Hortons, the Polt Group, the Toll Brothers in particular, very sensitive to what we call nouveau riche, new money. You know, they did really well in places like San Francisco, where they had the silicon rush early on, and lots of people went there and got new jobs and want nice new homes, right? So they also build lots of homes for the richer migrant communities. So when we saw the people from Hong Kong, after the handover, they all came over to the US. So they kind of, that's also their dig, their market. I would, in the near term, Steve, because of the tariffs and from what we know right now, building materials are going to be more expensive, right? All your copper and all that, because of the tariffs put on top, that's going to be more expensive. And so I think initially we're going to see some downside for those building stocks. Martin, anything to add and layer on the house building side of things, infrastructure?
Nothing really to add on that. And I think one of the things that you know, so besides the tariffs, if you take a look at how the tech sector has been impacted, because they're the most exposed here. Tech sector, Mag 7 versus S&P, I think 493. So you just strip out the Mag 7. At one point, Mag 7 represented almost 30% market cap of the S&P. That's come down a lot. The forward earnings multiple on the Mag 7 at its peak was, I think, 33 times. That was earlier this year. Now they're about 25x. S&P 493 is at about a 19 times forward earnings. We could see a re-rating, bringing down forward earnings, your PE, the forward PEs, to potentially down towards a 17 to 18 on S&P 493, and we could see that Mag 7 really dropping. So rotation into, if you're just buying equal weight ETFs, I think we're going to be seeing and hearing a lot more about that as the trade. So for people who want exposure, not to go into, is the trade will be looking at equal weight or something like an S&P 493.
Fantastic. So we just have to remind you that we're coming up to the all sessions. So do stay with us. You know, even if you go to work, can make it slightly later today, because today is going to be exciting. Thank you so much for being with us, Martin, on this historic day. Rich is coming back in, so stay listening.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested.
All right, we are ready. Are you ready, Anne?
I am so ready. This is so exciting. We live for these moments.
Oh God! Right, so 5 minutes to go. I'm a little bit scared. I've got to admit, this is not going to be a pretty open. Just a reminder from last night where we left play at 1 a.m. We were down 8% in Palantir at the $80 level. Tesla at 260. What do you think about Musk stepping away from the government? Do you think that's true?
I wouldn't discount it because, you know, two big egos. We talked about that a lot with the Tasty guys and Frank Caberna. Also, the fact that Tesla shares have been absolutely killed, right? Absolutely killed. At one point, I remember 2 weeks ago, a analyst friend going, well, he might want to fire himself because if you're a shareholder, you're not going to be happy, are you?
So instead, he's sacked himself from the government. But I wonder if it's all smoke and mirrors, as usual. He still does his work for Doge.
In the background.
It's just that his reputation, they try and repair that. Or do you think, people at home, let us know in the comments, is Tesla's reputation gone for good? Is it been destroyed? Or does he just need to put a couple of cool new robots out and everybody's going to be back? And, you know, saving people from space helped as well.
Yeah. The weaker than expected dollar against the higher than expected tariff action also for me was interesting because, you know, a weaker dollar could amplify, right? Could amplify the impact of these tariffs, you know, and prolong this trade war. I mean, the likelihood is hopefully lots of people come to the table. This whole thing was a big stick exercise to get people to the table. Yeah. But if not, then we could see serious ramifications long term for the markets.
We've got some jokers in the chat. Neil asking, does Steve Davies play snooker? It's Neil showing your age there, sir. Waka Waka saying, holy moly, the VIX is up 14. I think it's been up more, hasn't it?
Yeah, I think it was up further. Also, you know, just some checking in on the European side of things, just before we get to the oil sessions. Banking stocks, 5-week low. European banking stocks, 5-week low. Everyone is now concerned about growth. And we've seen those downgrades, right, on economic growth as well. European real estate stocks also rising as yields slump after these tariffs.
So HSBC and Barclays down 4.3. Then you've got NatWest 3.6. That was a great downgrade. I forget which bank it was. Was it Morgan Stanley? Downgraded NatWest right at the highs there, and it's only been going one way since.
But don't forget healthcare, real estate, defensives, utilities in Europe showing support there in a time when we're seeing a sea of red.
Have a look at the winners. Who are your winners? Wow, Marks and Spencer's. Look at that. Up
Diageo! Finally!
Finally showing some life.
Our Sachs, and I have this in our long, I think it's our Sachs, our long portfolio. So we're seeing that Nike swish at the end of Diageo sort of moving higher now. Phew.
God, it's amazing, isn't it? The allocation. This is you seeing long funds at work, right? This is you seeing how allocations change. It's the story of the year so far. In the US, for example, you see NASDAQ now down 18% from its highs, but the 493 other stocks are only down 2%. So, you know, taking those MAG 7 out, the equal weight S&P 500 was unchanged until today. So you've got, as you can see here, money going into Marks and Spencer's, Diageo, Severn Trent, SSE, National Grid, Tesco's, Vodafone, of course, the mighty Vodafone, the big beneficiary from those German fiscal break coming off.
The U-turn.
And GSK up 1.5, like you said about the pharmaceuticals.
Yeah, pretty good stuff there. Switching to Germany, because you just mentioned Germany and the U-turn. Just very quickly, European Union, of course, US raising the rate of tariffs on the EU to 20%. Just showing you the losers list there. Adidas down 10%. Commerzbank, Deutsche Bank also down there.
Right, okay, so we are almost ready for the all sessions. We've got 15 seconds until Angelina's going to ring that bell on the US all sessions open. Is Nike going to break that $60? Is Nvidia going to be down towards 100? Let's see this live open as we go. Taking a little bit of time to come through. Here we go. And we are off and running. Nike right on the $60 level. Walmart, you would not have expected that to be the second worst hit. Apple down 6. Palantir only down 5.7. Was down 8 o'clock at 1 a.m. 8% at 1 a.m. this morning.
Apple also down, it was down a lot in after hours trading as well. Don't forget, of course, Chinese supply chains will be hit by these steep tariffs, right? Let's have a look at some of the others. My goodness, Palantir down 6%. Andy Gavin will not be happy there.
Nvidia 105.80 trading, and Uber back above 70. So some of these moves not quite as bad as they were at 1 a.m.
How is Walmart doing? Because I'm just taking a look at some of the retailers here. Pinduoduo, PDD down 5%, and a lot of the blockchain, crypto-related names also are on the red list here.
Netflix down towards 900. It's a wide spread there, so be careful on that one. Of course, in this first minute of trade, some of the spreads will be wider, but Netflix down to $910. General Motors only down 1.6.
How's Tesla doing? Because Tesla was up last night when I was checking when Trump was talking.
Tesla down 4.6 at this moment.
Right.
Let's see what I call them the second tier. So some of the really spicy stuff. I try not to trade any of these. We see Upstart down 7, that favorite one of Ben Buswell across there in New York. I do actually have an options position on that at the moment, so I'm breaking my own rules.
Interestingly, Best Buy is down 4.4%. Walmart, just checking on the retailers for you, also down 6.5%. So we are seeing all these retailers, as expected, with these tariffs, right? It's going to really hurt them really badly. And so we are seeing this play out right now.
MicroStrategy down 4. Is Bitcoin? What's Bitcoin at?
Let's have a look. Just a reminder that Bitcoin is currently just for pro traders.
Yeah, Bitcoin down 83,000. MicroStrategy down 4. Yeah, maybe. Okay, maybe that's right. Okay, is Nike managing to hold? It is. Oh, I'm tempted, Angeline.
Oh,
I am tempted.
You're gonna
Step back from the computer, McDonald.
Oh, are you gonna? You don't look convinced there. You don't look convinced.
I want to buy it. I do.
What's stopping you?
Discipline.
That
Discipline.
little thing called discipline. It's down 7 now. How much longer are you going to wait? Which handle are you looking out for?
I think I want to see the US Open. It's just a minor retracement down. What's the level on the right hand side there, Ange?
It is 6034.
No, on the top. Sorry, so where it sold off from. How long's this chart?
So this is the daily chart.
Okay.
Yeah.
Right. So we, I'd be really interested to see the US Open. I've got lunch today at 1:30 with a friend from
Nike.
Wise Alpha, the corporate bonds. So UK corporate bonds, we're going to be talking about those.
Yes, because this could be the year of the bond, right?
That's the thing. Suddenly.
Yeah, bonds are sexy again.
Yeah. Tom Slatter on the chart. There we go. So my Finfluencer friend came up. What a genius to come up with that name, Finfluencer. But asking, can I buy a decent pair of shoes before investing in Nike?
He does have a new pair on, Tom. He does.
Look at those. How can that stock be below $60? I don't know.
Thanks, Tom, because now the studio smells of a certain odor. Matthew Cook.
That's my aftershave.
Most of most of PE justification surely just self-drive through in the medium to long term, says Matthew Cook. And also he's saying, wonder what reciprocal tariffs will be like and if the EU implements a digital tax. Well, von der Leyen certainly laying on thick that they are going to come out with those reciprocal tariffs quite soon. So I don't think you'll have long to wait, Matthew. Right, let's take a look at elsewhere.
And so my overall, not short term, not today, as I say, I'm stepping back today, but what I am really interested in is April the 10th.
Okay.
Right? Now, April the 10th, the tariffs don't start immediately. The tariffs start on April the 9th. He's done that because he's going to walk them back. It's so, Trump-like, Trumponian. So some of these will be walked back for countries that don't come out and retaliate. They phone up, they have a negotiation, and they drop. So 5,500 S&P, is that already pricing that in? Or do we see the opportunity to buy upside calls for April the 10th expiry, which is what you see on screen here? 5,600 calls for 35. I am just going to have a small nibble on those, let's say. $10 a point. So maximum downside, the price that I'm paying the premium, $340. But do we see a rally on April the 9th? So this is the day the tariffs are meant to be applied. Maybe they don't ever get past that silly board that he came out with.
Actually, I'd love to know the person that made that silly board because, even if you thought it was silly, you couldn't say it, could you? I don't think he'd take it kindly. But it was very basic, got the message through.
It was from their grocers. I swear the greengrocer in Gloucester Road has that exact board.
I've got another date for you. Ready?
Tell me.
So, the other date is the 2nd of May. We always give you handy information here on Trade Live with IG.
Thanks, guys.
2nd of May, because that 3rd of May is apparently when more tariffs are expected to come through. This is when we're talking about potentially pharmaceuticals. Matthew and Neil were saying, haven't heard anything yet. I was waiting for that too. But, there was, I think, a mention of no later than 3rd of May. So that date has been bandied about.
Yeah.
So maybe 2nd of May is another time when you want to...
Let's see if we don't have an expiry there. We've only got the 16th of May. So there are all your expiries that IG offers. The Tasty platform has a few more. So maybe on Tasty we get more like those weeklies into May. So yeah, that's what I'm happy to go out and spend on a option premium that I know what my downside is, rather than jump in and buy a load of stocks today without really having a feel of where people's panic limits are.
Yours is 4%, isn't it? Is it 4%, 5%? You're saying when markets start losing 4 or 5%, that's like beep, beep, alert.
Yeah, well, it's this, and this volatility index is, as we know it, as you remember very well, it's at 25. That I think at 25, that to me, as we cross up through 25, is a really worrying level.
Interestingly enough,
on the daily.
Just checking on the commodity space, gold is retracing and holding at that 3,130 level. Interesting, given that the tariff measures were bigger than expected. But it has had, of course, that big run there. So we're just seeing a pause.
That's me. I'm turned bear on gold here.
Yeah. Did you take it off? I heard you saying
I sold my
yesterday.
ISA. Yeah. Had it for 6 years. I've had a good part of my ISA in gold, and I think that's it. I think we see, of course it could go higher, in the next week or 2 weeks. But I think at some point we suddenly see something happen that gold's down 7% in 48 hours.
Yeah.
And we're back to that kind of 2,900 level. And yeah, I'd be happy getting back in there.
That handily ties in actually with one of my yellow lines there, because
Which one?
So the top one, that 2,800. So I think at some point it might retrace back to there.
Yeah.
And then do a reversal and fall further, which is why there's that perforated line. So it's the next port of call if we break the 2,800.
The market loves to chew you up and spit you out like that.
Yes.
Trend is still your friend.
Yeah, there we go. That is the perfect. For those of you that are only joining us for the first time, we understand it's a big day. A lot of new people joining in for the first time, joining the show for the first time. That is Axel Rudolph. He is our technical expert. And boy, oh boy, do we need technical experts around here, because on Monday, Axel told you, short the NASDAQ.
And here we are. Good call, Axel. Lots of people also chiming in on the chat right now. Let's have a look at that. Steve Davis chiming in after he talked about wanting to get into Nike. He says, don't forget your stop, Rich.
That's it. Steve Davies got the stop in there. So I bought them at 61.20, which means my stop is 58.20. Let's get that in there, since Steve Davies watching me like a hawk. 58.35. No, that's probably a little bit. 50. Let's give myself a little bit. 58.70. 57.75. There we go.
Helps to reduce your risk if you use it correctly.
The words of wisdom we have from Axel. Right, however, on Tasty, I have got a hedge on, chart off guys, have got a hedge on my Tasty account. I've just bought that during the break. So I have bought half of my short futures back. I'm short vol, so I'm going to get hurt on that today. But thankfully, I've got a lot of downside on the S&P 500 through put spreads and put ratios there. So that's going to be, hopefully get some money back.
It was a good call. You put that on yesterday, didn't you? Sort of after the show.
The old last minute, just to tidy up, just in case. What do you think of Wall Street Journal spoofing everybody at 5 minutes into the press conference?
Oh, I thought it was hilarious, but yeah, it was cheeky, but hey.
The market spiked 1%. I think NASDAQ was up 1.4% from the close. And you're sitting there and you think he's still got the guy from the autos from Detroit up on stage. Brian, hey, come on. Brian, get up here.
Yeah.
Why is the market up 1.4% when he hasn't said anything yet? And I thought, well, obviously you start to think, oh, well, somebody's seen the data. I didn't think it would be a big board, but it's because the Wall Street Journal misled everybody, borderline negligence, going out thinking they had the story first. They said it was going to be 10% across the board. What they didn't realize that board had a lot of nasty numbers on it.
Yeah.
So of course, market crashing after being 1.5% higher.
Has to be said that he did sort of lull everyone by starting with the 10%, right? And you kind of...
No, he didn't start with the 10%.
You were kind of waiting, and then when that board came up was when I was like, it's going to be bad. It's going to be bad.
I ran up to the television because I couldn't see the numbers.
Yeah, exactly. This is what I mean.
I've got a decent sized TV, but it's not a...
Yeah, and it was a decent board. And if you're watching like me on a mobile phone, you can't really see. I was trying to zoom in.
Yeah, no chance. As soon as I saw China 34% back and smash futures out, I had CNBC on one, Bloomberg on another, and then BBC on TV, and BBC was the best one. You always need to make sure your stream has got you closest to the live action coming out, and BBC were actually really good with that.
I was watching the BBC feed. I think I was messaging you too because at one point I was like, why is he now talking about eggs? Shut up. Go back to the important stuff. But yeah, it was worthwhile watching last night. And I was checking on the IG platform to see the everything was down. It was except Tesla, really. But everything, you know, US banks were down. You know, it was just it was worse than expected.
I fancy. Sorry, I've just got Nick Feingold chatting. Nick Feingold coming up in about 15 to 20, well, about 20 minutes time. This guy is a market legend. He's been around the market for a good 30 years plus. He built and ran one of the biggest brokers in the UK. I was dealing with him when I was at the hedge fund. He was also at Deutsche Bank for years. He's been all around the city and he's coming in to give us his verdict here today on these tariffs at about 9:40 a.m. this morning. Well worth staying around because, you know, if you think, you know, some people have seen things in the market, this guy has seen it all. And he's also, you know, a lot of entertainment along with it. So.
I'm also going to have a look at AstraZeneca here too, because AstraZeneca also moving higher, like GlaxoSmithKline. Just getting a note from one of the analysts of pharmaceutical stocks saying that, you know, this is because at the moment the tariffs exclude the pharmaceutical, the drug sector. UK also hoping that Trump's reciprocal tariffs will quickly be reversed. Shaw Starmer's praying there, focusing on partnerships instead, on AI and technology on both sides. So AstraZeneca up 1.6%. Let's just have a look to see what GSK is doing. And GSK is up 1.5% there. This, I'm going to change that to the daily chart so you can see the move there. So well done you if you have pharma stocks, your bullish pharma stocks. Right, automakers, let's have a look at those as well, because RBC just coming out saying that they see a positive environment for US car makers ahead of this tariff implementation. They're talking about supportive, healthy consumers so far in the US. The average transaction price is good as well, and that there's still pent-up post-pandemic demand. Interestingly enough, this comes at a time when US consumers, when I was there as well, they all seem to still be snapping up those pickup trucks. You know.
Yeah. Ooh, 50. Where do we finish? Where do we finish today? 9 p.m. Where's the S&P 500, Angeline?
Oof. Well, my gut feel, it's now, dare I say, 5,250?
Sorry? What was the guess?
5,250?
5,250, down another 5%.
Well, I don't know. It's been
Oh my
on the
God.
way down. Look, but you're
Well, the expected move's only 70 points, so you need to be buying yourself a straddle. So expected move. My chart, please, guys. 68 points is the expected move here for the rest of the day. So that's 1.3% move from here. So Angeline thinks we go down another 5%. I suggest you be buying some of those puts. Yeah, I don't know. Yeah, 50, I'll go 54.50. So 50 points lower.
okay. What do you make of the chat earlier? Martin was saying that potentially what he's looking for is more and more companies saying that they're going to build plants in the US in the coming months. So we were going.
It takes a lot of time. The problem is that, right, let's say you and I run a business and we've got factories all over the world. Some of it gets walked back this week. How do you know that it doesn't get walked back in a month's time? So we're having a board meeting and we have to commit $1 billion to building a new plant that takes 2 years to build and get all the machinery for.
Yeah, or more. And of course, if it suddenly gets walked back, then that would have just been,
Yeah, you cannot make that.
money thrown out the window.
Yeah. There we go. Poppy in the chat thinks the S&P closes at 5,600.
Oh.
So again, it's the straddle for the day is only say 70 points. So if you think we move more than 1.3% from here in either direction, is that the trade?
Poppy says short-term buy, surely.
We all knew tariffs were coming, Poppy. I agree with you there, but they're way worse than expected. This is much, much worse. That's the danger. People are actually amazed at how aggressive he's been.
I'll tell you what's interesting too. Like, all that talk about, Apple, building the plant and everything. And they're still in all sessions down more than 6%. Because it's going to be, like it or not, it's going to be hit a lot of, if I can't remember the percentage, but a lot of their manufacturing comes out of China. They've been trying to diversify away from China because of China being the crosshairs.
Yep.
And they've been trying to go to places to India, like to maybe Vietnam. But
That's the problem.
it's still
doesn't matter where you move. You've got to go to America, don't you?
Yeah, you're still going to get hit.
Right, chart up, please, guys. I'm going to have a little nibble on this. So I'm going to buy a 54.70 put, right? 54.70 put. So I'm paying 21 points for that. I'll buy 20 of those. And then I'm going to go down all the way to 54.10 and turn it into a 1x2. So I'm selling 40 at 6.6. So all in all, that gives me I've paid 9 points for 60 points of downside. So 9 ticks for 60 points of downside. I don't think we go below 5,400 today. And that just gives me a little bit of something to watch out for and not be crying into my afternoon scone and jam if we suddenly find ourselves down at 5,400. Good. Right, I'm going to run and let you talk to Tom W.
Yeah.
I'll get Nick Feingold into the building, get him mic'd up. Join us at 9:30. I'm hearing he's here.
Yeah, and
Excellent. Right.
Feingold is here, and I think you just triggered just by talking about your option strategy. Just triggered several people to post at UBS Global Wealth Management. They're now talking about expecting the Fed to deliver 75 to 100 basis point.
Well, you can't because you don't know
rate cut.
what inflation's doing. That's
For the remainder of
can't make
2025. This is like
right. I'm going to run. Tom W is going to join you for 10 minutes. Then we're going to get Nick in.
Cool.
See you.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal. And I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach. And I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There are too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
From the 2nd of April, watch Trade Live with IG weekdays from 7:30 to 10:30 a.m. on our brand new YouTube channel at Trade Live IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and your usual favourites, Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Well, here we are. Who have we got on air? It is Nick Feingold. We have you down as market legend.
Market legend. Wow.
Inaccurate?
The only person that thought I was a legend was my grandmother, who's no longer with us. So it's the first time I've heard that one in a while.
Well, I think by the end of this message, there'll be a few people, a few viewers thinking the same. It's the first time you've been into the show. Please introduce yourself to the world.
What, as the Fat Gladiator? Or?
Fat Gladiator, even better. As the original Nick Feingold.
Hi, I'm Nick Feingold, and I guess I've been in the city for almost 40 years now.
Wow.
And I haven't had many jobs, actually. I only had 3 jobs. I started out at NatWest, sorry, which, believe it or not, had an investment bank in those days. And how
did you get that first job?
Oh, I graduated with a 3rd-class honours in textiles, so I was clinically brain dead by any academic benchmark. In fact, actually, it's not true. I didn't start off at NatWest. I started off at a place called Wood Mackenzie, and I got the job because my brother, who was actually very clever, begged the head of personnel to give his kid brother a chance.
Nice.
Yeah, and I found myself in an interview with I think the first question was, I have 2 guys from Oxford, 2 guys from Cambridge, 2 guys from Durham and Bristol and Exeter, all with firsts. You have a 3rd in textiles, Mr. Feingold. Why should I give you a job? which is quite a difficult.
For all the graduates online, what was the answer that got you there?
The answer was I had 3 years at Manchester University. I said during that time I was lazy, selfish, self-indulgent, went out, drunk too much, had the 3 best years of my life. I don't regret a single second of it. And if I had my chance again, I'd do it exactly the same way.
You're hired.
Well, the guy rocked back on his chair and said, actually, it was a bit like that for me at university as well. So I think I got my job. I think I got the job by telling the truth.
Yeah, which is, it's amazing how many times it works because they just haven't heard it, have they?
No, they hadn't. And anyway, yeah, my brother was a huge part of getting me through the door. And he was at Oxford by comparison. So.
And what was that job at NatWest?
NatWest was, well, it was actually Wood Mackenzie that was taken over and eventually merged with NatWest Markets.
Okay.
So I started actually in Wood Mackenzie's office in Edinburgh, which at the time I think was like the third biggest stockbroking company in Britain because of North Sea Oil. It was a great firm, but I just didn't go down that well in Scotland. So I was supposed to be there for 6 months. I just guess they didn't approve of my sense of humour, really.
A posh English bloke coming to tell them how to run their money?
No, I wasn't telling them how to run their money at 21. I promise you.
Fair.
I had 3 copies of The Sun in my suitcase, and that was about the only research that I was capable of at the time. So it's just someone would sneeze in the office, and I go, no, none of that. It was the research department, so no one would go bless you or anything. They just get on with their work, and I go bless you, thanks very much. Got a bit of a cold today, yeah, thanks for asking, to myself. And then they asked me to do research, and I went down to the research library, and I would copy a third, as I had at university from the last 3 pieces. Amazing. And hand it back to them in 15 minutes when they were expecting me to take 2 weeks over it.
Basically ChatGPT.
Yeah, I went
ahead
down.
Of your time.
I went down like a pork chop at a bar mitzvah, as the saying goes. It wasn't a great start to my career.
So, where did you start to feel comfortable in that seat and move on up, and people got to know you?
Well, they sent me down. They sent me down to answer phones during the election. They said, and my boss sat me down and he said, that you're. Well, welcome to London. Obviously, there are a few bridges that need to be rebuilt with the Scottish office. And I said, no, they love me. It's like, no, they don't. They really don't. They want you fired. And the only reason you haven't been fired is because I hired you and I've put a protective wing around you. Right. And then they just put me on the phones during the election, which is, I think, believe it or not, the Thatcher election. The
first one.
Once I was on the phones, it was a very different story.
Okay.
Things started to get better.
And what was it like in those days, answering those phones with the way the market was compared with how it is now?
Well, I mean, we were, first of all, it was kind of the time of the 86 crash, was it? Was it 86?
87. 86 Big Bang.
86 Big Bang, yeah. It was 87 the following year. And everyone was running around with slips of paper. It was mental, really, and they were all red, and we were so busy, and everyone was so miserable, and I was like, what's wrong? We're so busy, because if you're a stockbroker, is a great thing usually, but what I hadn't really fully appreciated is they all had hundreds of thousands, if not millions, in the markets PA, and they were all getting wiped out. So even though they were busy at work, a little bit like right now.
Yeah. Right on this very day.
Exactly. So, it took a little bit of acclimatization, but look, if you like people, it's a social job. If you like clients, and listen, I've always believed you don't sell stocks and shares, you sell integrity. It's about being first with bad news. It's not about patting yourself on the back when you get things right. Yeah. It's like if the stock goes up, it's the client's idea. If it goes down, it's yours. That's just the industry.
And that took you on to, execution, because you had learnt the trade and decided, how did execution come about?
Well, I eventually went to New York for 5 years with NatWest, which was great because, the Americans had really just started to buy European shares. So there was a wall of money coming across from America, a little bit like now.
Yeah. You've seen it all before.
And I can't remember what the question was.
I guess, Was there always a passion to build your own thing, or did that?
Oh, sorry. Yeah, that was just really the introduction of technology into the dealing room. And
Right.
so I had huge American clients when I moved back from the US to the UK. And by huge, I mean, in those days it was Vodafone, Nokia, Ericsson, BlackBerry.
Yeah.
And, there were $500 million orders. And what happened is they introduced technology into the dealing room to help find the other side of trades, right? So that it was a more efficient process. But actually, really, all it helped was the derivatives desk that were front running the cash desk.
Oh, really?
And the proprietary traders. So, I just got very frustrated with the fact that every time I had a big order, I kept my mouth shut. The team kept their mouth shut.
Yeah.
But the stock seemed to move 3 or 4%, and we were being front run by our own traders.
That's it. We saw it in Credit Suisse all the time.
Yeah, and so I thought, why don't I start a business in a warehouse in Brick Lane?
Is that where it
A
was?
karaoke wall and a mini golf course and a bar. So basically, it was a sports bar. It was a sports bar for every dysfunctional, talented trader that didn't like working in investment banks, who brought their own franchise across. It was kind of WeWork 10 years before WeWork.
Yeah.
And the business model was very simple. We'll keep our mouth shut, and we'll try and find the other side of a trade for you. If you like a human pool of liquidity, where you actually could persuade people using the power of human persuasion.
Yeah.
And they're now dark pools.
Yeah.
Right, but we were a human dart pool at the
That's
time.
it. You really started, because I remember I was at hedge fund at the time, and this name execution kept on coming up. Yeah, if you've got a big order, you've got to give it to execution and.
Yeah, no, we were an annoyance for quite a long time. We grew it into a $100 million revenue business without any kind of investment banking or capital. So that was nice.
Right.
That was good.
And how many years was execution around before it was sold?
I think 12 or 13.
Okay.
But then we were slightly asleep at the wheel as the technology got introduced, the internets, the pools of liquidity, the stock matching.
Yeah.
It was turkeys voting for Christmas if you're the clients, continual contraction of 20 basis points, 10 basis points, 5 basis points. I think you can deal today for 1/7 of 1 basis point in some places if you're big.
Yeah.
So yeah, it didn't feel like the sort of business that you wanted to stay in too long term unless you had the ambition to do all sorts of other things.
Yeah.
That's what happened.
So from those days back in '87, you obviously saw .com boom and bust. You saw the financial crisis, all those experiences. And then you walk in and see today, or watched it last night.
Yeah.
What goes through your mind having all that experience, likening it to a move like today?
That rarely things are as good or as bad as they seem. I mean, 2 months ago, people were piling into the market because we had a business-friendly president.
Yeah.
Today they're hitting the exit doors because we have a guy in the White House who's reorganizing the global economy along the lines that he thinks is best. Mm-hmm. And there's very strong opinions on both sides, but there's a huge amount of emotion at the moment, and that never does you great justice if you're a trader or even a long-term investor.
Yeah.
Capitulation. But I do think that there are phases to all of these different events. Whether it's Asian contagion or mortgages or tariffs, mm-hmm. you sort of have phases and patterns which you start to recognize. So, if you look at McDonald's and Unilever,
yeah.
there's no improvement in their business. The money's just hiding there.
Right.
Yeah. And at some stage you've got a share price that's going up with no material improvement, everything else around it. So you have phases where stocks that make no money are vulnerable. Doesn't matter how good the announcement is, if they're not making money, they're not making money. So there's a flight to quality, and then eventually it hits the flight to quality, which is, I think, where we are now. I think we're moving from you may or may not like to sell to maybe have to sell. And have to sell is really when the decision is taken away from you because you're margined out, or because you're losing money over here, so you have to sell a winner over there to fund it. So It's confusing.
You know the long funds really well, right? Did. But the mentality is still the same, right? So take us through what happens on a day like today that, a big Wellington or Fidelity see the news last night. How does that get through to suddenly them selling, $400 million of Nike?
Redemptions.
Right.
That's what I'm saying. When you're in a have to sell environment, you take the decision away from the fund manager.
Yeah.
It's no longer their decision. They've lost the ability to exercise free will over their portfolio.
Okay.
And that's kind of the phase that we may be entering into now. And then you sort of reach a capitulation phase, and then there are staggering opportunities. I mean, the simplest way to look at it is there are things that you can be certain of, and there are things that you have no clue about, right? And the economy and how this all pans out, I don't care how brilliant the economist is, you don't know.
No.
What I'm certain of is there'll be opportunities down the line. So you wanna cash up.
Keep your powder dry.
You want to not catch up completely. Like gold has been incredible, right? I spoke to two of the billionaire members of the club who don't know each other, but independently, their biggest position was basically short the dollar.
Right.
Why? Because the White House kind of wants the dollar to go down.
That's it.
And really, currency is about trust. Not economics. It's about trust, and the reserve currency of the world is now one of the least trusted currencies of the world. So I try to make things moronically simple for people, which
works well for me.
If you're working with leverage, don't be too big. Try and afford to be able to take the hit, because you're going to be living in volatile times.
Yeah.
But the long-term trend is your friend if you can afford to stay in it.
Now, after you've done all that, right? You've been involved in markets for coming up for 40 years. You'd never believe it with that complexion, of course.
Of course.
But you've always looked forward in your career. You've looked at what's going to happen next, and you've discovered content, and you've discovered the world's gone mad on content. But companies as a whole and financial markets don't seem to be quite there yet.
Well, it's a very nice way of saying that the financial service industry bores people to death with the content that they produce.
Yeah.
The stories are incredible. These are stories about decarbonizing the planet. These are stories of, about medical breakthroughs. I was talking to a company called Xvivo the other day that literally they make boxes that you put your heart in for a transplant, but in their box it can live for 7 hours, and in someone else's box it can live for 3 hours.
Brilliant.
But told through the voice of the C-suite, sometimes they have the capacity to make an incredibly exciting story unbelievably boring.
Yeah.
And that's because our industry has invented a language which is designed to cast intellectual superiority over its audience, so that they can charge fees.
Yeah.
And I think that, the community that you service, I think they're just as smart as the average fund manager.
That's you lot.
I think they understand, and maybe it's an oversimplification, that half of America and the rest of the world now doesn't really like Tesla very much.
That's it. Yeah.
It's kind of, and
it's
then
not
I
rocket
think
science.
They also understand that Jam Tomorrow's stories, like we're going to make lots of money in a few years populating the world with autonomous robots. I think they probably understand that, that's quite some way off, right?
It's great in a bull market.
It's fine in a bull market because it's like the Shakespearean principle of suspended disbelief. But when when you look at these companies that don't make money and you try to calculate the PE and you realize there is no E, that's a little bit disturbing.
Or the E's in Clyde Cuckoo land.
Right, and it's the same with Bitcoin. I mean, there is no E. It's about trust and confidence and scarcity.
Yeah.
And so, so the content world is going to go through a revolution. The first part of that revolution was ChatGPT, ingesting the world of text, and now you're able to manipulate it in a way which can help you tremendously. But the second leg of that is more exciting, which is text and moving image. So I wish we could play our video of
the Fat Gladiator.
Fat Gladiator video. But I think, you know, when you can make $1 million Super Bowl advert for $10,000,
yeah,
or $5,000, like we just did, I think that financial storytelling changes dramatically.
Take a step back there and tell us what you have created with curation. And sorry, is the Fat Gladiator on YouTube?
No.
Okay.
No, I'm not on YouTube.
I could have.
I'm not on YouTube. I don't trust myself. But
okay. So yeah, tell us what you've created with curation.
Well, it's in beta testing, but we call it Project Shareflix, which is sort of Netflix for stocks and shares.
Yeah.
And you know, by the way, this is not to say that fundamental analysis, technical analysis are not important. They're vital. They're vital parts of the equation.
Yeah.
But the part of the equation which the content world addresses is attention, right? Which is that unless you have people's attention, you're never going to get them to do the fundamental or technical work. And so this really relates to the attention-driven economy and how you attract people's attention using AI-generated videos. So we've built a product suite which we call Shareflix. And we're waiting for the AI generation, the AI video generation to sort of be democratized, so that people can produce these $1 million adverts for pennies or thousands of dollars. And then then it's how good you are attracting the attention of the people and how good is the advert. So, I mean, Cadbury's chocolate don't advertise 4 times a year. Only public companies do that. There's a constant branding exercise.
That's it.
And so, you know, companies need to wake up a little bit to the technology. Regulators need to help the companies by providing clarity in the guidelines that they're giving them.
So you're essentially creating a platform to allow companies to advertise themselves to all these guys, not to stuffy brokers like you used to be. This is talking directly to retail clients and showing them the same sort of story, the same kind of opportunities, but in an interesting way.
Yeah, I mean, listen. If I had a campaign to run before with the time left in my professional career, which is probably very limited, especially after today, it's for retail investors, whether they be high net worth or whether they be just interested in markets and starting out. It's for them to be treated with the same respect, dignity, and provided with the same quality of information as institutional investors. Something that, you know, I hope we can work with your firm to achieve, you know, because they deserve that respect. And much more importantly from the company's point of view, the world divides into three individual segments.
Okay.
Third passive, third active, and in North America at some points, a third retail.
Yeah.
So if you say that passive is out the picture because it's indexation, then if you're not talking to retail, you're almost not addressing 50% of the net new marginal buyers in the world.
They can actually make a choice.
Right. And so, you know, BMW will spend £100 million telling you why to buy the car. That's a made up number, by the way. I don't know what that is, but it will be a lot of money.
Yeah.
But try and find some decent content as to why to buy their shares, which is measured, balanced, trusted.
Yeah.
You've usually got some YouTuber saying, you know, it's going to double or treble. You know, our job is to, you know, also respect the integrity and the intelligence of the audience, which is, you know, like we did this John Deere video and like we sort of said, well, Tesla's worth whatever it was at the time, 800 billion, and John Deere was worth 50 billion. I think this is 2 or 3 years ago.
Yeah.
You know, what do you think there's going to be first, people? Do you think there's going to be autonomous cars running around Delhi with 180 sensors and 10,000 people in the road and goats in the road and whatever?
Yeah. Or
do you think there's going to be autonomous tractors that can't hit anything in a field powered by solar? Right? And it's like, oh, actually, I think there'll be autonomous tractors before autonomous cars.
If only there was a company producing them.
Right, and John Deere do produce autonomous tractors, and of course, when you have the harvest, you need 24 hours a day.
Yeah.
And you can't hit anything in a field in, you know, Idaho or wherever you are.
Yeah.
So, you know, you have to make it simple enough for people to understand. And then the other thing is that the institutional segment, once they've bought a share, it only goes up if someone else buys it after you.
That's it.
Right? So the institutions want the corporates to have retail strategies as well.
Yeah.
And so it's all super interesting. It's super interesting watching the space evolve and how behind the curve regulators across the world are.
You'll be happy to hear I found a video on YouTube, the About Us. So let's take a quick look at this and see if I can, let me see if I can get volume on this. There we go.
Quite old.
Right, can we go to full screen on this, please, guys? So we might not get the sounds perfect, but
community of investors, all of whom were prepared to compliantly share their industry knowledge with the club, ensuring a diverse, well-informed and versatile membership. The club would be inclusive, redesigning the way financial information is delivered, favouring a thematic approach that mitigates risk and highlights success.
It's quite old.
World authorities, first-class speakers and special guests would regularly address the club on key topics, offering their unique and unparalleled insight.
So that gives you an idea. What I'll do is I'll post a link, and we might go into that tomorrow. Chart off, thanks, guys. And we might go into that tomorrow. But the address, the website address
is curationconnect.com.
Curationconnect.com. We as I say, we'll have another look at that tomorrow. But just give us an idea of the sort of next steps and the club that's associated with that.
Well, sorry, there's the Curation Collective, which is the club,
yeah,
and there's Curation Connect, which is sort of the beta testing of Project Shareflix, which we'd welcome people's feedback on. So let me get that right. That video is quite old, but sorry, what was the next?
There's a far more entertaining one, isn't there? Which is what I'll try and show tomorrow.
The best one is my 50th birthday. If you can ever find that, that's a good video.
Well, that's been already. Never.
It's you and me, but mostly me from the Book of Mormon.
Right. Oh, jeez.
Quite amusing.
Yeah.
Save that for another day.
Okay. Yeah. So there's a club, and then there's Shareflix. Tell us about the club and the kind of level of investor and knowledge and intelligence you've got in there.
Well, I mean, the intelligence is kind of discretionary in terms of what you view, but I would describe it as an unhirable pool of talent. It's a constellation of ultra high net worth individuals, family offices, industry pros that have done it for 40 years. Not everyone's super rich, but we're all trying.
Yeah,
we're trying hard.
And still trying. There's still the drive and the passion for markets. I've been on the group for about 2 months now.
It's pretty incredible, right?
It is absolutely incredible. Thanks to our friend Jamie Goldstein. And
hi, Jamie, if you're watching, by the way.
Well, yeah, you've got it. Anyone else you want to give a shout out?
This is your fault.
All down to Mr. Goldstein, who's been sitting in that seat as well.
But we met on holiday. It was like fine Goldstein. It's like, yeah, we should get on.
Yeah, there's a natural allegiance there.
Exactly.
Yeah, give us an idea of the kind of events that go on in the club as well.
Well, it's just an astonishingly well-connected group, really. So, look, the club is run for the mutual benefit of the members. Okay, so it's not like if you are a member of the club, it's like, hi, I'm Nick Feingold, I'm going to tell you exactly what to do. We run it on the basis of the fact that one of the members is a world-class Indian expert, one of them's a Scandi expert, one of them's a technology expert, one of them's a retail expert, one of them's an ex-hedge fund manager who's now running his own money. Not one, but these are groups of different expertises and skill sets. And it's basically, our job is to sit in the middle and gather the very best intel from the network, and you've seen it work. In terms of, when somebody mentions a stock, on the group, it's kind of pretty interesting.
Yeah, and there's people have views on there. Quite a few of my ex-colleagues are on there.
Really?
And yeah, Dipesh and I work together at Macquarie.
I suppose when you've worked in as many firms as you have, you've got quite a few ex-colleagues.
Yeah. Only 3 firms the same as yourself, Mr. Feingold.
Little joke.
But yeah, it's just, I guess, getting, when you get to your age, You've got quite a little black book of context, don't you?
Sorry, what did you say?
We'll turn up the.
Yeah, no, listen, it was the connectivity of, it started during COVID as a bit of fun because we were all stuck at home, and I just sort of said, look, I'm seeing all these sort of interesting themes. I'm doing a lot of work for corporates in terms of curating information, which is where the original idea came from. We are all drowning in a sea of information whilst being starved of wisdom. It's too noisy, and so as you're curating information for BP, BP would ask you to do something on hydrogen, and then you look at the market and see that ITM Power, Ceres Power, Ballard or whatever, they were all at the time were all up 1,000%, but the heads up from BP had been a year or two before the stock moved.
Okay.
So that's kind of the genesis of how it started. I just sort of said, and then what you learn is that, look, this goes for IG Index, it goes for every group of traders. You're just more powerful as a collective, right? Yep. So if I phone up Facebook and say, hi, I'm Nick Feingold, would you speak to me? I'm not going to get very much attention. If I say I'm Nick Feingold and however many tens of thousands of traders from IG Index, and my group represents 200 billion of AUM, and God knows what yours represents.
Yeah.
Then they listen, and then you have a chance at Zuckerberg, or you have a chance at the CFO, or you have a chance certainly from IR. And that's another really interesting subject, is how good is the IR and comms department of the companies that you're buying?
Yeah.
Because a stock only goes up if someone else buys it after you.
All about the storytelling.
If their IR and comms and their storytelling isn't good. So we write to 100 companies, 50 or 60% don't write back. It's like, I don't want to own those companies. When we've got these companies on, sometimes we've got 40 people on the call. Sometimes I think we've had like 120 live on the call.
Right.
Halfway into the CEO's presentation, if 50% of people have dropped off the call, it's pretty valuable data. Data that companies don't care about to this point,
There's an incredible talent for German mid-caps to hire somebody that looks exactly like their CEO as comms.
Yeah.
And it's just...
Look, they're great. I think those presentations are great, for insomniacs. If you're having trouble sleeping, there
much like this interview,
all of these sleeping apps out there. When really just get a Zoom presentation from some sort of IR department in pretty much any country of the world, and it'll send you off faster than listening to whale music or the sea.
Much quicker.
It's much quicker.
Now, give me, before we go, we got 3 minutes left.
Okay.
I want one of Nick's Feingold stories. I want one of those.
You don't want any stock tips or anything to do with markets on this occasion? I love that. That's great. I don't know. You need to speak to my son because it's my 60th birthday in June, and he's been collecting a book of stories behind my back.
Really?
Yeah.
Most entertaining day you've seen on the floor, with a sort of a big change in the way the market behaves, or...
Well, in the old days, you used to just after Big Bang, they were sort of literally on the phone to 5 market makers, and they were calling 5 market makers simultaneously, lifting them all out of 50,000 shares at the same time.
Oh, Jesus.
To get 250,000, you'd call 5 market makers simultaneously.
Yeah.
That didn't last very long. But it's just some of the behavior. The head of market making at one of my old shops was, every day the Americans would come in 50 million Nokia, 50 million Nokia, 50 million Nokia, 50 million Nokia, right? And then one day, I was out actually quite hammered because I used to get into the office at 3 and I got an order to sell $50 million. So I said, can you sell $50 million worth of Nokia?
Yeah.
And the head of market making calls me up the next morning. He goes, Feingold, do you realise, right? Do you realise, you've cost this firm 2 million quid? And I'm like, well, that's really interesting because I wasn't asking for any capital, right?
Yeah, so how's that happened?
So how that happened?
Yeah.
And he's like, well, you didn't tell us you were going to be a seller. So every day they come in long.
Of course,
expecting
you
me to
keep
be a
bit,
buyer. Now the
you?
guy come in and sold 50 million bucks worth, they'd done 2 million quid. I was like, you're an idiot. He's like, Feingold, you talk so much. It's unbelievable. And I said, with the greatest respect, Dougie, that doesn't seem to have done your career too much harm, you know?
Nice.
You know, it was coming out of the mouth of a 24-year-old was probably not appreciated. But, you know, there were complete dinosaurs in the market, you know, when we started out. So, you know, things have changed. I think a lot of the fun has gone out of the industry.
A lot of the characters?
No, I think there are great characters. I think it's a bit like Prohibition. They're just hidden.
Yeah.
I don't think that the world stops producing great characters, but you're just not allowed to show it at work. It's it's exactly like Prohibition. People don't stop drinking; they just drink underground.
Nice. What was it like back in those days in the 30s?
It was fun. I mean, it's been a brilliant industry to work in. I think it's got really exciting days ahead of it. I can only see retail investors being empowered further. I can only see the democratization of information helping them. And, you know, I think once we get to a stage where we can treat retail with the respect that they deserve, right, in the same way, and basically provide the same service that institutions get, but just without sending them into a coma, I think we can have really interesting days ahead. And the wisdom of the crowd and mirror trading and all the so exciting things that are happening, I think, you know, I'm very optimistic for pools of retail liquidity. I think they're going to become increasingly powerful if the people that are in charge of them leverage the benefit of the collective intelligence of the crowd.
That's it.
And all the benefits that come with being 100,000 people rather than one person.
Yeah.
And that could be discounts on all sorts of different subscriptions, you know, it could be access to sort of information and direct management. I see no reason why we can't provide a service to retail investors the same way that institutions get it going forward.
Brilliant. Right, I promise you a look at the markets before we go. So let's have a look. Getting a round of applause there. First time in a while.
Yeah.
Let's have a look where we're leaving markets going into this open. Nike down 8.5% now. It's broken that $60 barrier, 59.5. Can you see those without the glasses on, or?
I can just.
Go on, run us through what jumps out at you there.
Well, I was short Nike, and then the new CEO took over, and sort of there was a big bounce.
Yeah.
And, yeah, it takes a long time to turn a super tanker. And I think, you know, this is a general point with, you know, like all of these big market caps. You know, I'd say three things. If you're a trillion or 2 trillion or 3 trillion market cap, the maths of it just suggests it's tough to move the needle.
Absolutely.
To open new businesses in a normal market that materially move the needle upwards. It's just tough.
Yeah.
Because the new business has to be of a certain size and quantum that's going to allow you to benefit.
So you're always going to have slower earnings growth.
It's even tougher in a soft economic environment, right? And it's even tougher when the world's against you, right? Which is like, you know, the thing about, you know, the sort of real blue chip American stocks is that no one has been more brilliant at exploiting the rest of the world, the opportunity in the rest of the world, than the Starbucks, the McDonald's, the John Deere's, you know?
Yeah.
And so the idea that you pull it all back and turn everyone against that, it's the franchise damage I worry about.
Yeah.
You know, that can't be undone by an executive order. And so with all of those names, you know, as I said, with Tesla and you know, United Airlines, people are, I mean, you saw it on the chat, people are not going to fly to the States.
Because they're getting stopped at the border.
Right, and that turned into short IAG because it's long haul, and transatlantic, and buy EasyJet because it's European short haul, right? Yeah. So if you're a market neutral trader, that's kind of interesting. Yeah. Although obviously a soft economy is good for no airline, you know, that's one thing. But, you know, I'd certainly sort of try and be in market neutral trade. I mean, Airbnb will be a slowdown in tourism. You know, NVIDIA, you know, I read an article the other day that, you know, and I think it was from Palo Alto Networks saying that DeepSeek had had helped it increase its efficiency by 95%, which is what they originally claimed. And so it's unusual. You know, Novo Nordisk is a great example. Here, I've got a drug that's going to change the world. And well, look how quickly other things arrived. Yeah. And, you know, you can see it with NVIDIA that Meta and Amazon and all the hyperscalers do not want to be captive.
No.
Long term, you know?
Of course. I mean, you can't go on spending 10 billion a quarter with one company.
Well, not in a soft economy, you know? And so the great thing that we're talking about at the moment, I think in the club this morning, is really, you know, we've talked about the concentration risk caused by passive, which is $100 going to the market and $50 going to 7 stocks by default. So there's huge concentration risk. You know, who the net new marginal buyer is if that unwinds, you know, if passive start to sell because they get redemptions. Well, I think that's kind of maybe where we are.
Right.
You know,
On the precipice.
I think that it's quite possible.
Yeah.
And then if you look at the balance of payments, you know, a quick word on tariffs, you look at the balance of payments, obviously the EU exports much more than, you know, to the US than the US buys from the EU. But where there's a huge balance of payments surplus is with services.
Yeah.
Which is Meta, right? Google.
All of them, right?
Amazon. Yeah.
Yeah.
You know, so if there are retaliatory tariffs, they're more than likely to be in the area of services where the hyperscalers are hit. So then I go back to my other point, which is now we're just big and ugly and difficult to move the needle.
Yeah.
The market's against us, right? And there might be retaliatory action
that hit earnings,
and everyone has no confidence. So if there was a time when you were going to start to see, you know, and you started to see it already, there's always one big leg down and then there's a bear rally. But just ask people one simple question. You know, I fell off again speaking to a club member, which is who is wise. You know, how many people are waiting for stuff to go up so they can sell it?
That's it. And always in the back of your mind, it used to be, well, if the S&P drops 5%, I probably want to buy it. If it rallies 3%.
It's a different psychology, right? And we're not very good at it. I'm certainly not very good at it. You know, it's much easier to buy dips than sell rallies because we want to be optimistic, and we're optimistic for good reason, which is over 50 years. You know, the 87 crash looks like a tiny blip. Yeah. So we'll see. Things are never as good or as bad as they seem. But the one thing of which we can be certain of is if you do sit on some cash for a while, there are going to be some extraordinary opportunities because people are into forced liquidation. So you want to be the other side of that.
So it's any sign of those redemptions we've got to really watch out for. And it's the first time that I've read it anywhere, heard it anywhere, or seen it written is from the one, the only, the market legend, Nick Feingold. Start hearing redemptions and it's all bets are off on buying the dip.
Yeah, and I'm short some UK asset managers just because they're market proxies. So I'm not very clever, but again, if you're trying to turn around an asset management company during a hurricane, it's pretty difficult. Yeah. You know, because the market's against you. So it's easy to, you know, and again, asset managers have had the market on their side all the time. So even though they've underperformed, most of them, and even though there has been fee compression, it's masked what is a real bad deterioration in the underlying business.
Interesting, because you've had the natural growth in assets under management.
Some of those UK asset managers have done badly when the market was doing well. So my very simple, slightly pea-sized brain goes, how badly will they do when the market's doing badly if they did badly when the market was doing well?
We'll soon find out when the skirt's lifted, or the kilt.
Exactly.
Nick Feingold, that is us out of time. We're already 6 minutes over. Thank you so much for joining us.
Thank you for having me. I look forward to not being invited back.
We'll see.
All right, buddy.
Everyone, thank you so much for joining us today. What a morning. The volatility, good luck. Keep that discipline. Keep the risk tight. We don't want to see anybody getting those big, nasty margin calls. Join us tomorrow and we'll find out what happened. Thank you.
T-Day has arrived. It is Wednesday, April 2nd, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Mike Butler in Chicago, filling in for Dylan Radigan today. Because, of course, we need Mike Butler here today to balance out Ilya's bearishness. Someone needs to be getting on this rocket to the moon with me. Will the tariffs allow this to proceed, however? We're going to find out any moment now. Trump expected to speak here right at the top of the hour, running a little bit behind. But the audience is gathered in the Rose Garden, so we watch and we wait. If you're already on the platform, if you're watching us on tastylive.com, thanks for joining. Be sure to come over to youtube.com, telling us what you're trading and join the conversation. Getting a lot of background echo there all of a sudden, studio. In any event, if we take a look at these charts, we look at what's happening in this session. It was a day where we were down and then up and then down and up, and now we're up a little bit. S&P 500 on a chart, 5710 right now, ahead of the tariff announcement, 0.64% gain. NASDAQ up by 0.75%. The Russell up 1.55% here. Bonds reverse off the highs. Yields actually move higher over the course of the session. We do see that gold and silver continue to move up, and we have a dollar that is in retreat. Mike, you're the returning champion here on Overtime, guest champion. So we'll start with you. What are you thinking about what's going to happen here over the next hour? Is it too late to do anything if you're trading futures? What's the plan?
That's a great question. I would say there's a couple of things that are in play. I think my personal feel is that the market is pricing in uncertainty just because it is Trump at the end of the day, and you never know what's going to happen. I think the last 4-year cycle that he had showed us that, with a lot of volatility in the markets, two-sided action, et cetera, et cetera. But when you look at the volatility curve from the J contract all the way to the Z, everything is in the 20s. I shouldn't say 20s, it's 20 point some number. So every single futures contract is at 20, which I've never seen before, which I think just adds to the spookiness of the scenario. And then you have a lot of people buying upside calls in the VIX, but then you also have a lot of people buying upside calls in the S&P and NASDAQ. So I think you could see this come in a lot lighter than expected and see the market start to try and recover. Or it could just be a big nothing burger with all of the call buying and volatility assets and equity assets offsetting each other. So I personally do not see a real bearish situation here. I think it's really fear the announcement, and then once the announcement is out and everything is on the table, then you digest the information and the market kind of either sputters or moves to the upside. But who am I? I'm just a guy waiting for the actual announcement to take place, just like everyone else. But what do you think?
Trump just got to the podium, so I suppose we're going to find out any minute now. Look, there were reports coming out this afternoon that the Trump administration had reached out to the UK government, which in turn passed on information to private industry. And in that conversation, there would be 3 tiers of tariffs, 10, 15, and 20%. Those different tiers, or bands, if you will, would apply differently by country and by industry. We're going to find out, I suppose, any second now. 5705 here, S&P 500 losing a little bit of ground as Trump starts to speak. The Make America Wealthy Again event has officially begun. As we find out more information, we'll be happy to pass it along here. Ilya, net, what do you make of today's action as we await these tariffs?
I think it really speaks to the idea that the market waited until February to get worried about tariffs that they knew were broadly coming in November. And November was the latest. I mean, really, the markets were probably pricing this in earlier as it looked like Trump was going to win. But after the election, the idea that there would be tariffs should have been baked in. I don't think the markets are afraid of tariffs. I think the markets are afraid of the implementation and what that implementation has meant for growth, which is why they waited until February to see the business confidence data, the consumer confidence data start to roll over and go, okay, it's not the tariffs. It's that there's a legitimate headwind to growth from worries about what the tariffs will be and how they'll ultimately look. It's the back and forth. It's the implementation. And so you see the markets today, they're not panicked going into to this. And they're not panicked ostensibly because if they get clarity, if they get something of a tariff scheme that they can extrapolate forward in some kind of a forecastable 6-month, 12-month, 24-month way, where they can say, okay, this is what this means, adjust expectations for inventories and hiring and consumption and investment as follows. They'll price it in, and on we go. The issue is if the announcement is non-specific and leaves lots to the interpretation, and if it sounds like whatever the announcement ends up being is negotiable because the tariffs are a negotiating vehicle, not a remaking of global trade vehicle, which means that whatever is announced is impermanent. And then that's what the markets really don't want to see. So I think when you look at the price action today, I think the market isn't scared. It hopes for clarity. The issue is that is really if the clarity doesn't come, and then the economic data for the rest of the week, ISM, NFP, tells you the economy is already in a bad way. And no clarity plus already a hit from that uncertainty to growth, that's the worst of all worlds.
Trump is talking. He's just, I wouldn't say vamping, but in terms of the actual numbers for what the tariff thresholds are, we still haven't heard those yet here. He has not provided any details. I'm trying to listen in one ear and this in the other. It's usually how the voices in my head sound, but not perhaps the best way to go about doing a show. Right now, I mean, I think that, Ilya, you're spot on. Again, Oren Cass of American Compass, he's an economist who bills himself as someone who's part of the new right, not part of the old like George W. Bush, Reagan right. He's trying to provide the intellectual heft. There's that word, intellectual heft behind Trumpism. And so, as we discussed briefly yesterday, he was on the Daily Show with Jon Stewart the other night, and that interview made rounds. It was all over my Twitter feed, at least. He was retweeting it into my Twitter feed, perhaps. But the point I'm getting to is that he said that it's not the tariffs themselves, right? It's the actual implementation. We have all the costs and chaos of tariffs without the actual, potential benefits and upside of them. We do see that stocks here are off a little bit now, 56.96 here. I think a 5-minute chart better encapsulates what we want to look at as these remarks go on. I still see what appears to be just chatter. There hasn't been a number just yet. We could talk about equities here a little bit, though. Mike, I wanted to bring the Tesla conversation into this discussion because we've clearly seen some headlines around Tesla today. Elon Musk potentially leaving the White House in some capacity, although I've been questioning all day long whether or not this is actually news because Politico reported it on Monday night. It was in Brett Baer's interview with Elon Musk over the weekend where they talked about him leaving in May. But clearly the stock liked it, up 5.33%. Have you been playing in Tesla? What do you think about Tesla here, basically? Is this finally turning a corner?
I think it's an interesting move to the upside for sure. You kind of saw that spike higher, about 20 points higher, around 10-15. And it didn't really look back after that. So we can try and align like when that news hit the wire. But yeah, I think when you consider they released numbers early, some of their preliminary numbers before their projected earnings announcement, which should take place in the April 25th options expiration. So there's still plenty of implied volatility in that cycle. Plus minus 42 points on a $280 stock price is not anything to be scoffed at. Ooh, market's up 60 now. Look at that.
Oh,
hello.
I think they're coming in light.
80. Wow. Bitcoin's up 2K. What's volatility doing? Wow, volatility getting crushed here.
Gold is getting smacked around too.
Good. I rolled out of my position today, so I'm not supposed to roll this.
Good.
I got rid of everything that had like 35 days or under GTE. I just pushed out today, except at the end of the session when I told Nick and Thomas, I'm like, guys, I feel like I'm not a scalper, but I am an idiot, so I'm going to buy these 1,500 calls that expire on Friday. Just because if the reporting is accurate, then right, like Besson said, cap. That means no more escalation.
Yeah,
means we can only go down.
Wow, gold is getting brutalized here.
Yeah, big move.
Gold's off.
Tesla's up almost 8 points after the from the close, I should say, moving with this
I was having this conversation
risk-on move
just yesterday. Yeah, for sure. I was having this conversation with Victor just yesterday, and he was like, "Well, what's the weirdest out there move that might happen on this announcement?" I'm like, "Gold goes down."
10% across the board tariffs, according to the Wall Street Journal, who just got a copy of what Trump's saying in advance. Only 10% across the board. That's not 20%.
That's not the worst.
Yes. So this kind of.
So it's. Yeah. Go ahead.
I was just gonna say this kind of goes with that there's a fear of what could happen, but if it comes in lighter, I kind of see how I don't see how that could be a bearish thing, and you're kind of seeing that in the instant market reaction we're seeing now. But I think you need to see this sustained for multiple days, weeks, for it to kind of show the light at the end of the tunnel here. Still plenty of volatility.
Definitely. And ultimately, I mean, Mike, to your point, the key question here, as ever, is we know that we knew we were going to get some kind of a tariff rise out of this, right? And the big question was, is it going to be big? Is it going to be small? Is it going to be this? Is it going to be that? Nobody's questioning whether we were going to get a tariff rise. Tariff rises, as the Fed has explained to us most.
Gold came all the way back, by the way.
Yeah. There it goes, by the way. That was fun.
Stock still holding.
And really speaks to this point. No matter what it is, it's a tariff hike, and the Fed is telling us that historically, and they're right, certainly, tariffs are bad for growth and a lift on inflation. You can argue about whether it's a permanent lift or a temporary lift. That is debatable. But it is, for some period of time, a lift on inflation, and for a lot of the time, a hit to growth overall, oftentimes a long-lasting kind of cooling effect on economic activity. All of this then boils down to higher bonds pretty much either way. None of this is ostensibly good.
Well, Ilya, isn't this now? Do we have a small window here where the market got so ginned up about tariffs? We have now 5 cuts priced in. Actually, a little bit less than that here as we go into the end of the day, but basically 5 cuts priced in through the end of next year. We're going to get tariffs at a much lower rate than what's been dangled out there and feared. They're being implemented. We'll see how the implementation goes, but it looks like they're being done in a form and fashion that allows for some room for de-escalation.
Yeah.
So now you have the worst case scenario off the table with a Federal Reserve that thinks the economy is going to slow down, even if it hasn't yet, although Q1 data does look rough.
Right.
Why wouldn't the market see the lower rates now as the cushion beneath it with the tariff certainty in our pocket?
It may. We're gonna have to see. I think one of the more interesting things that's going to happen here over the next 24 hours is going to be the ISM service sector index, and if that suggests that, as the S&P Global version of the data has suggested, that service sector confidence is significantly eroded, then whatever firefighting the Fed has to do on growth will be that plus tariffs, a further hit to growth. If the baseline is okay, plus modest tariffs, okay, yeah, we readjust, but it's not the end of the world. But defining the point before will be very important. The NFP report, obviously, on Friday goes even further in that direction. And we might basically now take the next 2 days for the dust to settle and for the real kind of verdict on this to happen next week. Because if if there's going to be some hit to growth, then it's very important to establish from where you start. And from where you start is in the Fed's own assessment. The survey data looks awful. Does it show up in the hard data, or is it just sentiment? Well, if it shows up in the hard data this week, then we have a different environment and a different tolerance level for a tariff hit to growth.
You can see the tariff impact in the commodity space right now. Last week, we spent some time talking about why the tariff impact is producing higher copper prices but lower wheat prices. How come not all commodities are benefiting? And it speaks to that structural supply-demand imbalance insofar as the U.S. consumes more copper than it produces, and then the U.S. produces way more wheat than it consumes. And so, if anything, you're creating a supply bottleneck for copper in the short term. We're going to have to pay more to get our hands on it now. Domestically, there's going to be more competition for the copper supply available. Whereas with wheat, you're just flooding the domestic market because we're not going to be able to adjust our production quickly, or otherwise all this food's going to rot. So prices could come down in that regard in the short term. We've seen that play out historically here. Stocks are holding on to most of their gains. The Russell's up 2.48% now, 2075. The Nasdaq's up 1.61%, 19,920. Dow Jones, who cares about that? We see here in the bond market, likewise, bonds aren't necessarily losing ground, though, right? Stocks had a very positive reaction to this. Bonds basically dropped back to where they were around lunchtime and stopped falling. Ilya, I think two things can be true throughout all this. The economy is going to see lower real growth as a result of the tariffs.
Yes.
It's also possible that this is a risk neutralizing event where we now have a North Star. And as long as there isn't a threat of further escalation at this point for any arbitrary or capricious reason, then we can begin to make those kind of plans to lay out capital, and we have a little bit more certainty. It may not be certainty that we like, but at least we have certainty.
Well, that's the thing, is the markets really want certainty. And that'll be really important here, because if it looks like what this is an opening bid in a negotiation, it's tough to have certainty because these things can change. We've seen that on a dime, you have 25% tariffs. Oh, we had a call with the president of Mexico. Never mind. 25% tariff on Canada. Oh, I don't think we're going to have an issue with Canada. They're not one of the countries that have taken advantage of us. I just had a great call with Mark Carney. So the question is really of durability. Is this durable? Did we really just hear something that's going to hold and can be extrapolated by businesses and consumers for the next year? Because if you tell, let's say, a U.S. Steel manufacturer, these tariffs will hold for the next 12 to 24 months, well, then that manufacturer can make some adjustments and say, all right, I can build a factory, I can hire more people on the basis of this. Whereas people who consume steel might say, okay, I need to fire some people, I need to reorient resources, I need to cancel some investments over here, but this is not going away. None of those decisions can take place if you don't know that something might change tomorrow. And that's been the cadence of it.
Trump just said the Great Depression happened because we didn't have enough tariffs.
Beautiful.
I'm sorry. That's it for me. Like I can't like that. Intellectually, that's not a defensible statement.
Well, no, it's almost like you go to the place of maximum consensus because, of course, the impact of tariffs is one of the few very consensus things in the economic research community around what caused the Great Depression. So I suppose you go to the point of maximum expert consensus and you go the other way. That seems to be the logic here.
I mean, it's widely understood and appreciated that countries erecting trade barriers in the early 1930s reduced trade globally, which in turn caused the Depression to go on because overall economic growth was lower. Yeah, like we have
data on this.
Yeah, was it the economic trade spiral graph of the 1930s, which it's a terrible visual, but it makes its way around all the time these days because of the tariff talk that's happening. But
it is as though somebody has been talking to the president about how the narrative around there has been, this is Smoot-Hawley again, and this is going to lead to the Great Depression again, and that was on the president's mind, and he wanted to go hard contrarian.
I hate this graph for a number of reasons, but it just shows as you move forward through time, trade is kind of like going down the drain here.
Yes.
The footprint of global trade is shrinking as you make your way from the late 1920s into the early 1930s. And if global trade in US dollar terms is dropping, what happens? That's lower real growth. Mike, surely there has to be an individual stock play that you're interested in on the other side of this. Is it Tesla? Is it Ford, GM? Is it an Amazon, a Meta? Dylan's been playing in the pool for Amazon as a kind of anti-tariff trade. Not that it's worked out necessarily that well, but it is up 2% here right now and up to close to $200 here after hours.
Yeah, I think Amazon's interesting. I was told earlier that the Zuck from Meta was at the White House or near it today. I don't have any factual data around that, but that's interesting. But no, I think when you look at what we've heard today and the notion that Elon could be stepping away from his role in government and focusing more on the Teslas of his attention, I think Tesla certainly has room to the upside. I mean, it was trading at 500 at the beginning of the year. It's at 280. And we're seeing it rally, it continue to rally after the close, up 6 points. So yeah, I think Tesla, whether you like or hate Elon, it's still a product that could certainly go up 100 points. Like, even if it goes up 100 points, it gets to the middle of the range of where it was for the last 6 months. So I definitely think Tesla's interesting. They have earnings coming up, although it'll probably be muted with some of their numbers coming out, but still plenty of implied volatility from an options trading standpoint. There's lots of things you can do in there. I was looking at a calendar spread in there for smaller size accounts, like a 325 or a 300 strike calendar where you're long May, short April, and then you can just roll into the earnings cycle. I really like that setup if you're planning for an upside move, but yeah, we're seeing the market sell off here, down to only up 40 now. Volatility
coming back in.
Yeah, volatility creeping back in the 20s. We were kind of getting crushed in the near term cycles. The later cycles were elevated, but
that's a sharp reversal there.
Yeah.
Oh, hello.
What did he just say now?
Oh no. Ooh, we're red. Wow.
Oh,
yeah.
Whoa.
Whoa. So I guess this is another question too. With some people in the YouTube chat are asking, with our tariffs out now, what is the most probable retaliation tariff you could see? And do you think it would be? What's that?
I mean,
Europe is going to come.
Canada.
And I mean, I think if you're going to be. So this is what's moving the market here, by the way, folks. Trump just clarified that the 10% across the board reciprocal tariff rate will be half the overall tariff rate.
What?
The reciprocal rate will be, oh, good. Thank you. I finally got filled on that.
Do we have a good sense of what this means?
It means that stocks now are down.
Wow.
in the session.
Wow.
So, what we giveth, we take away here.
Live rug pull within 30 minutes of starting.
Gold is obviously enjoying the news. 31.85 here.
Scratch everything I said about that.
Wow.
Silver up here now nearly 2%, approaching $35 an ounce in the SIK5 contract. Likewise, you're starting to see bonds turn the corner again. They never broke through their lows earlier, and now we're back into the mid-118s here on ZB. It's a quick turnaround here as more information is coming out, and obviously we're going to be looking for more clarity here in the markets.
Wow.
Okay, so yeah, see,
volatility's back. Look at that. Yeah,
No,
that's
sir,
really
I don't
interesting.
hate it. So I went into this thing long bonds, short a little SPY and triple Q, just a little bit, just some modest little put verticals, and it looks like maybe I wasn't totally wrong. It looked like I was going to have to do a lot of cleaning tomorrow when this first started.
I'm trying to figure this out here. Again, like trying to figure this out in real time. It looks like that he's holding up a board right now of the tariffs that are charged against the U.S. versus what our recommended reciprocal tariff rate will be for those given countries. It looks like we're slapping on a 34% tariff for China, 20% for the EU, 46% for Vietnam, 32% for Taiwan, 24% for Japan, 26% for India, 25% for South Korea. And you go down the list. Okay, UK only got 10%. That's not bad. So it looks like there are different tariff levels by country, which, you know, one of the considerations that we've talked about in recent months has been about like NVIDIA and how come Singapore is importing all these NVIDIA GPUs that if you did the math, they would be using more electricity in a single quarter than the entire country produces in an entire year. They must be a pass-through for something. If you give China a 20% tariff but only put a 10% tariff on Vietnam, you're incentivizing creating a system where Chinese companies set up subsidiaries in Vietnam. They export to Vietnam first, and then they go to the U.S. This is not that. This is absolutely not that. This is more aggressive. Yeah. So bonds here are getting a healthy bounce. Gold's getting a healthy bounce here. I don't think I'll be punching that 5,800 lotto ticket Friday.
Dollar is back storming, but interestingly, as we've suspected, Chris, it's doing a lot more moving up against the Aussie than it is against the euro or the pound. In fact, the pound is actually probably holding the best of the bunch here. Yen has gotten stronger as well because of the risk-off dynamics here. But the pound is holding up impressively, better than the yen even. The euro is holding up pretty well. The Australian dollar is getting taken to the woodshed.
It's not great, Bob. S&P now 5632. This is going to stay like this. And Mike, would you have preferred to have seen this on a Friday afternoon after the close? Because it feels like we're now going to have an hour to panic. I mean, usually the 5 to 6 p.m. Eastern hour in New York is when all the traders go to the gym or hit the bar. So
a lot of bar activity today.
Yeah. Okay. So it's more of a, like today's my off day, right? Like I guess I have Price of Truth later. Maybe not. Maybe I'll have an alcohol-free beer between shows. Because it feels like it's that kind of day. But what do you make of this whipsaw now, right? You're kind of now trapped, or you're running out of time to make any positioning updates, right? Futures market closes soon. Last trades need to be on the board already.
Yeah, they're pumping up the near-term volatility. We're now at a 50-cent-ish backwardation, in the J. The J contract's up to 21.
Up now.
Before this happened, right at the close, SPX expected move through Friday was like 110 points. So even though we're chopping up and down, we're still within the expected move. So I think if we open up or down 30 points tomorrow, I think you could see a big vol crush. I think the market was pricing in a lot more movement and one-sided movement. So we did sell off 80 points from where we closed pretty much, but I think this is just another continuation of more to come, like more 50, 100-point moves every single day until something happens to where that's not going to be the case. But it's good for a trader's market, that's for sure.
It's a great trader's market right now. I'm just kind of, besides myself in a funny way, right? I think net, I'm still up on the day. We're doing fine. Okay. We're doing fine. We survived today. That's all that matters. Yeah. But it helps being long gold and silver. I don't know what else to say.
Yeah. There you go.
Yeah.
It's the only thing that's keeping me safe. And papering over my equity sense. Yeah, I think it's just so funny that we get this report. Trump says it's going to be 10% reciprocal tariffs. The Wall Street Journal comes out, says we got a copy of the plan. It's going to be 10% tariffs. And Trump comes and says, actually, that's not the entire plan. We have more, folks. And is this worst case scenario, Ilya? This isn't 20% across the board. This is some getting more, some getting less. Some are getting much more than 20%.
That we have chosen to do this on a country by country basis, I think really defines the negotiability of it. And that, I think, is the ultimate read through here for me. If we said 10% across the board and nothing else, companies could go, okay, take our cost structure. Here's the cost structure. Adjust. We'll see you next year. Good night. The markets would love that. I think that was the initial response. They would love the forecastability.
Which one is the market in the mood for right now?
If I could see better what that is, because your name tag is over.
Oh, sorry.
Lift higher.
Nicotine or lollipops?
Oh, nicotine for sure.
Okay.
Okay. For me, might be the lollipop, but I'm exposed on the bearish side of this. So send that over, and we'll utilize both. I should also point out that because my kids are 4 and 7, there are just bags and bags of lollipops stashed around this house.
Nicotine around the house, yeah.
Naturally.
Nicotine lollipops, yes. This is not certainty. This is the opposite of certainty. There are individual tariff rates on countries, which means that this is indeed an opening bid on negotiation bilaterally with those countries. And if that's what it is, nobody knows what's going to happen next, because we're going to talk about it for the next however many months.
So Trump's campaign rapid response team just put out the reciprocal tariff charts that are a little bit more legible to see than what we were pulling up here. In any event, let's talk about some of the numbers that we see that stand out. It's 10% as a minimum, as a floor for every nation on Earth. That's not the case for most countries. I'm most interested in Chile here, 10%, right? Thinking about what's going on with some of the commodity centers. Is China the most important one here? The 34%? Is it the EU at 20%?
Probably not, because that there would be aggressive tariffs against China was kind of a given. Just whether you do reciprocal tariffs or you don't. I think the jump on the European Union is probably the one that's going to get the most back and forth. The jump on Japan is not great. I mean, this is where the negotiations are going to come. I mean, I would expect that the one on Japan, given the kind of relatively cordial relationship between the two administrations there, you probably get that negotiated down fairly easily.
Stock S&P off 1.5% now, 55.82. Sorry, go ahead.
Yeah. No, Hegseth was just in Japan and sounding all the right friendly cues. So I think we're looking at probably something that's very negotiable, and to the extent that it's negotiable, it is uncertain.
Crazy.
New lows here for the S&P 500, 55.76. We can take a step back from our daily chart. Not thinking I'm going to punch that lotto ticket this week, guys. That does put us 50 points. Hey, listen, the gold stuff in the 3,200s is making up for it. 55.33 is the low that we have from Monday in the S&P. The Nasdaq now down by 2.4%. The low that we have from Monday is 18,976. We're about 200 points away. The Russell, which was up, now back down, 1992. which is 6 points off the low from Monday. All those gains that we saw accumulate this week have since dissipated because the tariffs have come in. If you just tune back into the show, folks, let me just start over here. Ignore everything we talked about in the first 10 or 15 minutes.
Yeah.
Come in now. Join us. The water's warm. Why is the water warm? Trump put a fire underneath it. Tariff rates are not 10% across the board. Tariff rates are not 10% across the board. They are a floor of 10% across the board. Treasury Secretary Bessent was telling us that they were going to put a cap in place, potentially near 20%, and there would be tiers, as apparently was leaked to UK, according to Sky News, according to The Guardian. None of that was true. So we have a market now that is in a more significant pullback. There is a risk-off move making its way through the market. Bonds are bid. Stocks are coming off the board. Gold and silver are all up. So, Mike, let's revisit those first 15 minutes. How does Tesla feel to you now at these levels?
Well, yeah, Tesla just sold off almost 10 points. So not even Tesla is safe. Seemed to be the darling of the day. But this one's tough. I mean, I totally agree with Ilya. I think we got it's 10% across the board market reaction with the market rallying and volatility getting collapsed. And then he pulled out the foam chart, the foam chart of death. And that changed the narrative.
Let's go to visuals. Oh, no.
Pretty immediately. But looking at volatility, we're seeing an uptick in volatility, but it's nothing crazy. I mean, we were at 20 across the board in all contracts, and now we're at 21. So we've seen a little bit of an increase, which is, still a sizable percentage increase, but we're not seeing a 20 to 25, 20 to 27 move into this 200-point reversal. So I think that's interesting. I don't know. I think we were already in the world of uncertainty, and we're still in the world of uncertainty. We got a 5-minute window of maybe a little sigh of relief, and that was taken away, swept out from under us. So again, I think it's more two-sided action. Good on you for being long gold and silver. I actually got into a long silver position as like a catch-up trade today, so that should be nice tomorrow. But yeah, this is interesting. This is wild. We are not out of the woods yet.
One of the more interesting things here is that the dollar, if you look at
haven't lost money yet today. Still made $60.
It's actually up, and yields are down.
God.
So this tells you what kind of a move this is.
Yeah, it's a kind of move that pissed away my whole trading day.
Yeah, dollar and yen are up, and everything else except gold is selling. If gold starts selling too, then we're going to the mattresses, as it were.
That would be the event. I'd say let's take a look at the sector performance today, but obviously the markets move so much here after hours that the final closing prints that we see here don't even really matter. For the juxtaposition, though, I suppose it's worth noting, we had retail, consumer discretionary, banks among the top performing names. The underperformers today were all of the things that have done well this year, or at least have held up during the swing lower in stocks. Oh, of course, not just DXY, $DXY. GDXJ, XLP, GDX, OIH, XLE were the bottom 5. I have a feeling that might be reversed tomorrow. The past few weeks, discretionary has been up while all of the growthy stuff has been down. And with the NASDAQ off 2.5% right now here after hours, after being up nearly 2%, you're going to be looking at what looks like to be an ugly Thursday.
Yeah.
I think the bigger question we have to ask ourselves now is, do we trust anything that comes out of Scott Bessent's mouth moving forward? It seems to me that nothing that he has said over the past week has had any relevance to where the tariffs actually came out to. I would argue that about Kevin Hassett. I mean, what's the signal? Where do we get signals from the administration? Is it now just Trump and Trump alone? Because it feels like none of his surrogates or cabinet members portrayed any of this information accurately relative to the final product.
I'm going to revive the thing I've been saying yesterday and the day before, and really since the last CPI update which is that the markets have stopped listening. They have heard the part from the administration that matters, which is we see the stock sell off, the market needs to detox, we don't care. And so the markets have turned to the Fed and said, okay, well, if they don't care, you are the one that has to care. That's why they went into the FOMC meeting going, if only the Fed would commiserate with us and tell us that we see what we see and we're not delusional, and that they also see what we see and will come and save us and help us to cushion all of this with cheap money, well, then that would be better. And the Fed kind of did that. And so I don't think that they're really listening to the administration, because I don't think they think that the administration is amenable to market discipline. Instead, I think they're looking to the Fed and going, well, those guys are going to keep doing what they're doing, so you have to come and backstop this thing. Much like what we learned in the wake of the 2008 crisis. Of course, the Obama administration gets shellacked in the midterms, and then we end up debating the spending priorities, debating every rise in the debt ceiling. We have a sequester. Fiscal policy in the middle of a recession ends up being a headwind, not what it's supposed to be, which is a stimulus. And so the markets, what do? They turn to the Fed and go, all right, well, you got to keep this QE train going, because otherwise none of this is going to work. And really, you're the only game in town. So I think the markets basically since then have been conditioned to say, when fiscal policy is incoherent, go to the Fed as the sanity of last resort. And that's what we're going to see here. I think the markets are looking at ISM, looking at NFP and going, okay, Powell, you're going to talk after NFP. Tell us that the cavalry is coming. And if he comes out and says, I don't know, we're not sure, it's not enough hard data, that's the risk. That's where things go really haywire.
Mike, what do you make of a market reaction that sees volatility futures jump up towards the weekly highs but doesn't clear them as a result of these tariffs?
I think if we were to expect a lot more uncertainty, and I see some people in the YouTube chat asking about circuit breakers and whatnot, like that's a 7% move. You need a big move for that at these prices, but
please no.
Yeah, I think it's. I guess we're still within the expected move, which is the only way I can really explain why volatility futures are creeping up, but they're not creeping up as much. If the market was only projecting a 40-point range for the rest of the week or for this announcement, and we see a 200-point sell-off from the highs, you would have seen volatility futures react in a more violent way. But I also think the fact that, like we're saying here, Jay Powell speaks at 10:25 Central on Friday, there's still a 120-point expected move for the next 2 days. So normally when we come on a Monday, we see a 120, 150-point move for the week. So I think there's still a lot of uncertainty already priced in, and just the fact that we're within the expected move, even though it's a much more scary thing when you see up 90 green to down 90 red, you're still within the expected move. So I don't know. I don't know what to say anymore.
Is this the scenario that you and Mike were? Because you are Mike. You and Nick, at least from my understanding, have been talking about like what's the worst case scenario for traders in all this. Yeah, and it's like that we just kind of stay within the expected move. Vol doesn't really tank or go up. We're just kind of pinned. Does it feel like we're gonna get pinned here?
It feels like it. Yeah, that's what Nick was calling the pain trade, where the long VIX traders are playing for an upside move. They're paying too much for the move that doesn't happen. The call buyers think that tariffs are going to come in light, and they're paying more because volatility is inflated, and they just got a 200-point reversal. So this is currently the pain trade, where vol doesn't move to any degree that's going to pay off anyone that was buying calls in the VIX, or even playing to the upside in the VIX upright. And if you were long the market, you are certainly going to feel pain tomorrow. if this holds, which I assume it will. So yeah, we are in max pain territory. But again, I think we need to see, like, for us to really see a true bottom here. Like I said this before, I believe on this show specifically, you can't return to all-time highs when the VIX curve is flat, or if the VIX curve is in backwardation. So until you see that come out and you see the VIX return to the teens and go back into a steep contango, you're not going to see the E-minis back at 6,000 or above. So I think we could see this continue for the rest of the year. And if we do, again, that's great for two-sided action. It's great for a trader's market versus just a passively long market for sure.
Traders market, 5,600 back in focus here. We're off the lows by what, 35 points, maybe 30 points. We're also off the highs by 200. So what's that between friends? We are seeing those moves in the metals.
Take a look at the Atlanta Fed GDP update as of April the 1st.
No, we have to. It's so bad. It's so ugly, Ilya.
It's approaching 2% decline for the first quarter before factoring in this gold weirdness. If you leave it at face value,
it's minus 3.7.
Yeah. So if you thought that the model looked bonkers, as we've said, there's no way the economy contracts multiple percentages in the first quarter. Come on, this is weird. Not that weird.
The balkanization of trade and the eroding place of the U.S. economy in the world seems to be good for the metals here, which are holding up throughout all this, by the way. They spike after the tariff announcement. Even with the clarification on the tariffs, they're holding up. Gold did hit a new all-time high today, $3,201.60 an ounce in the GC M5 contracts. I'm playing in the GC Q5 now, where we rolled out our exposure to some new out-of-the-money calls. Those are sitting in 3250, 3275 with 84 days to go. So we have some time on our side there. Same thing for silver. Those were bumped out into the SI N5 contract, a long 36, short 37 call spread on the follow page. And so that's starting to bump back up as well. The metals, I've been evangelizing them for the past 2 years, Ilya? You've been with me here along the way.
Sure.
It feels like this is the kind of picturesque environment for the metals right now.
The only reason I am not long gold with you right now, having been long gold with you earlier, is I got out and then didn't get back in enough because I was asleep at the wheel. But bias-wise, I'm there. Silver, to me, looks better here just because it's had less of an extrapolated move, and you have a clear high against which to look. So if you get a breakout, there you go. The gold chart looks interesting because we might have gone too far. If we look at the temporarily, the trend is up. Of this, there is no question. But markets don't move in straight lines.
Or
we
do
probably
they?
have. We probably or
hear me out.
Yeah,
hear me out.
Yeah, we probably don't have a any kind of near-term reason why upside can't continue. Because if you look at gold and the way it's behaved here, it's not behaved linked to the dollar or bonds or yields, which is its normal MO. It's not behaved relative to the dollar either, which is the other kind of element here.
Mm-hmm.
It's just moved relentlessly higher. And to me, it's kind of like what gold does when there's a war that breaks out. The markets just instinctively go to gold, not because it's helpful in a war. You're not going to throw gold bars at anyone. But that seems to be the sort of reflexive reaction where the markets go, I don't know what's going on. I don't know what variables to even look at. Buy gold. And so it seems like the on again, off again tariff thing has had that kind of a response in gold where they're like, we don't know what the variables are. We don't know what's going on. Worst case scenario, whatever, just buy gold. This is sort of like when Russia invaded Ukraine. What does gold give you as a hedge against Russia invading Ukraine? Nothing. But the markets reflexively do it anyway. And so I get the sense that maybe if the Fed actually injects a little bit of more dovishness into the conversation and the market level of concern and panic eases, that might, strangely enough, take something out of gold.
So can I ask, you're getting me thinking here.
Yeah.
Is the uncertainty removed? We just got a clear we just got a clear plan, didn't we?
It's not removed because the plan is country by country with different rates, and so clearly an opening bid on a negotiation. This stuff can change within 48 hours if the Mexico-Canada example is anything to look at.
I couldn't help but notice that Canada and Mexico are not on these graphs at all. What does that mean to you?
I think it suggests that our thesis that what's been going on with Mexico and Canada is fundamentally a negotiation ahead of the renewal of the USMCA next year holds. I think that there are friendly leaders now as far as the negotiation process is concerned on all sides. Trump was absolutely effusive after his first conversation with Mark Carney. And that makes sense. Mark Carney is a crisis manager. He's not about any kind of nonsense. He probably went into that conversation in the transactional spirit in which it was offered. Carney saw the Bank of England through Brexit. He saw the Bank of Canada through the 2008 crisis. This is not anybody that's going to flinch at a sharp-elbowed conversation. I think the president seems to like that. The conversation between him and Claudia Sheinbaum in Mexico was cordial from the election onward. Mm-hmm. They've been having friendly conversations that both she and the president have talked up. So I think we are looking at basically something that is, again, a negotiating bid, much as we do with these reciprocal tariffs. And so that's where I think the uncertainty comes. Markets can't forecast this forward because who knows what it means. I mean, the EU tariff at 39%, is it going to stay at 39%? I don't know.
We have
us a week.
It's the Orange Bowl. You have Christine Lagarde versus Donald Trump, the two most orange world leaders on the planet right now, who are leading the fight versus one another. Christine Lagarde, she that fake tan is no bueno. I did something, today was a day of me punching lotto tickets for various reasons. Wrong on the 5,800 call. What can I do? I bought an 80-82 call spread in crude. I think that crude volatility is underpriced, which was the rationale for why I did it. And I know these trade barriers are going to be bad for growth, but I wanted to buy something deep out of the money. I saw today that Emmanuel Macron hosted a cabinet-level meeting with his top ministers in Paris. Usually not interesting because you never know what they're about. The French government never titles these cabinet-level meetings as anything other than a cabinet-level meeting. That was not the case today. The French government had explicitly titled the meeting to reference Iran's nuclear ambitions and how the United States may respond. And the reporting from that meeting was effectively one of two things is going to happen. Either Iran is going to sign a deal with the United States, or France is of the understanding that the United States and Israel are going to attack Iran. That also juxtaposes very neatly, or rather fits complementary with the reporting that we talked about last week, where there had been satellite imagery of a large number of U.S. military assets building up at Diego Garcia in the Indian Ocean. So connecting point A to point B, it's a straight line. It's not a pattern or a trend, but it's enough of a line for me to see with my tinfoil hat to think that maybe there's a bit of geopolitical risk looming around the corner for which the market doesn't have the capacity to price right now because we're so focused on the tariff conversation. And we're not really thinking about foreign policy at the moment as a mechanism to move the market. So I'm looking for a play to the back towards the top of the range here. It has long enough dated exposure. I think it's actually out on the CL N5 contract for 75 days. I just wanted some cover here for over the next 2-month window where if this reporting is accurate, we can have a vol expansion, and that's probably going to be bad for a whole bunch of other things in the world, right? So if there's a hedge in there with crude, if only for geopolitical risk to inflate, that in of itself is a trade, looking for the vol surface to change. And I think just at a 13.4 IVR when I was looking at it today, it was worth looking for a volatility expansion, broadly speaking, given some of the events on the ground. But guys, we're going to have to leave it there because there's more digestion ahead. We're closing out this hour. Futures markets are about to close. We're back to order processing here. S&P is going to be down 1.56% on the session after being basically up by that much and more. It looks like it's a 4% swing now from high to low here in the after hour. NASDAQ, same kind of play, 2.3% lower. You have your Russell off by 2.3%. Gold did touch $3,200 an ounce. We also see bonds rally back. ZB up in the high 118s once more. The next 48 hours are going to be interesting, folks. So while we take a quick break here, be sure to stay tuned, of course, next for Macro Money with Ilya Spivak. I do want to thank Ilya, of course. He's the co-host. And Mike Butler, the other co-host, continued champion, guest champion here on Overtime. So for the two of them, we will say Overtime is now out of time. See you soon. Ilya up next. I'm back for the Price of Truth with Victor. Much more Tasty Live coming at you.
See you there, everybody. Liberation Day is here. How do you feel? We're going to discuss about how the markets feel and what they may do with this information tomorrow. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we'll do is go through where the markets were ahead of the news that we had today. Obviously, everybody was waiting with bated breath for the tariff announcement coming from the Rose Garden of the White House today. The hope was that we'd get some kind of certainty and the markets can unclench. And then we'll take a look at what this might mean going forward, because we do have some economic data to offer a nice little follow-on lens from which to look at all of what is going to happen next. So let's break this down. Here was the S&P 500 going into the close. This is before the after hours action. Of course, we had the announcement come after the cash equity close. And as we can see here, the markets were not in any kind of panic. And we can see that here and reason that then our logic, as we've discussed it here on Macro Money over the past really months, has broadly borne out, which is to say that the markets are not afraid of tariffs. They knew about these tariffs back in November, or at least the concept that there were tariffs that were coming. The markets only really became unnerved by all of this here in the middle to late part of February. And of course, naturally, the question comes, well, if the markets don't like tariffs in general, where were they on them here, where clearly there was not a period of consternation? Why here? And it's the same story here as we were going into this announcement. What the markets wanted really wasn't a canceling of the tariffs, because clearly they knew that they were coming and they were not going to sell off on that realization alone. It's a similar story for the bonds. we see here that we have interest rates actually going up in the immediate aftermath of the election, basically saying, okay, well, we're going to have tariffs. They might increase prices a bit. Maybe interest rates need to go up some, but the economy is also doing relatively okay. And that probably is broadly a little bit more inflationary. So maybe it means the Fed needs to cut rates a little bit more. Not until or a little bit fewer times, but the cuts are maintenance cuts, and what this ultimately is going to be is not anything terribly detrimental for the overall business cycle. Obviously, that's changed, and of course, stocks reflect this as well. We've seen a much more dovish view on what was expected, but in any case, today, again, ahead of the announcement, no panic. Just a sense that, okay, maybe we'll get to the clarity, and maybe that clarity will unwind this, or help to unwind it, and this. Because really, that seems to be the reason the markets are annoyed. If they weren't annoyed in November, what got them annoyed here isn't that the tariffs are coming, it is how they are coming. And the evidence that their arrival might herald some sort of inconsistency that doesn't allow businesses to plan, consumers to feel good about spending money, and so forth. And really, that came about as those forces started to appear in economic data. And of course, we start with the S&P Global PMI numbers that, as of January, February, show us that the economy is starting to rapidly decelerate. Now, these are preliminary figures for March, where we saw a little bit of a bounce. We've already seen the final one for the manufacturing side released earlier this week. Perhaps there'll be a little bit more of an adjustment up or down, but what we see here thematically is the most important thing. Clearly, the economy was looking very strong in the final 6 months of last year, powered by a buoyant service sector. You can see here, services powering ahead. As ever, these charts are in terms where 50 is neutral, above 50 is growth, and the further you go above 50, the faster the growth. Below 50 is contraction. The further you go below 50, the faster the contraction. So we can see here, first and foremost, services are what matter, because the composite index that takes in both services and manufacturing really just follows services. Moreover, manufacturing can be in contraction territory, where it was most of the second half of last year, and the economy can power ahead all the same because it's services that's pulling it. Then this occurs at the beginning of the year, and this is where the markets get upset, because it's showing that uncertainty around fiscal policy, and tariffs more particularly, is starting to weigh on business confidence and in expectations for economic activity. And that activity slows dramatically. It has since, again, rebounded a bit if these preliminary readings hold, but nevertheless, there's been a clear level change, even if they do, to a significantly lower level. And it's happened in the service sector, where you're not necessarily impacted by the tariffs directly, which tend to impact goods trade, not services, at least in their direct impact. But the real issue here is sentiment. And the idea that the way that the tariffs are being rolled out, and the way that fiscal policy more generally is being rolled out, is not giving businesses a level of confidence to plan forward. This is really where any of this becomes a concern. It's the same story in consumer confidence. You arrive at a place here where, again, really February and onward, consumers start to see the rollout of the tariffs, the rollout of some of these other policies, and we can see that there is a surge in inflation expectations back to where they were just at the peak of the inflationary cycle in 2022, and consumer confidence craters in its estimation primarily of what's coming next. The assessment of the current environment, not great, not moving in the right direction, but not anything scary. But the overall sentiment index is getting pulled significantly lower, back to levels unseen since the second half of 2022, largely by this drop, this aggressive decline in expectations, which itself, not surprisingly, is linked to the surge in expected inflation. And lest we think that this is all just a collection of individual points in the sort of flood of macro data that we see, consider the Atlanta Fed GDP Now forecast, not for its levels. I mean, currently, certainly it looks quite ominous, where even if we factor out the disruptive influence of gold imports, which have, according to the Atlanta Fed, been an outsized downward sort of catalyst here for the overall model and the way that it's constructed, even if we sort of predict the model looks more like this. Nevertheless, we are looking at growth for the first quarter that's deeply into negative territory and in excess of negative 1%. Now, should we get married to this number? Of course not. It'll be quite a while yet before first quarter GDP numbers come out. But the important thing is the trajectory of the line here, which reflects real-time inputs from incoming economic data. When the data comes out, there are regular revisions. There was a revision yesterday. There will be another one tomorrow. There was no real big splash U.S. economic data today, but PMIs and ISM came out yesterday. There's more of that tomorrow. We'll see another revision, but this model is revised very frequently. And so the real takeaway here is the tone of the data that's been going into the bucket. And the slope of the line clearly tells you the overall thrust of data input into the model has been exceedingly negative. And so this is really why all of this is so dramatic. It is about the uncertainty of implementation and what it means, less so the substance of tariffs as such. So then we have the announcement. And what has been the market response? Well, not great. Initially, we get a pop because it seems like what we have is a 10% across the board tariff, which would, of course, give the markets the kind of forecastability and businesses and consumers the kind of forecastability that they've been pining for